Oh, thank you, everyone. I hope we're all ready to have a nice learning experience. So my name is Stacy Ketiko, and for this session, I will be your host, your moderator, your timekeeper, anything you want me to be actually. But in my real life, I'm programs lead at B4B Partners. Um, Okay, I'm seeing some interesting things in the comments. Napa Ibadan in the house. Is that true? Chika, you're in Enugu, really? Nice, 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 nice. Olakule is also in Ibadan. I love that. Thank you, everyone. Thanks for joining us this morning. As we move further into things, I would just like to introduce us to you. So B4B partners, we have the mission to empower individuals, businesses with the tools, strategies, and support they need for scalable and sustainable growth. And that's why we do workshop sessions like this one. Today, we are here to talk about winning in FMCG markets, like you already know. And you might be asking, why are we doing this session today, or why is this topic very important, and why is it important for us to talk about it? We're seeing that in the FMCG industry, everything is highly competitive. There's inflation. Consumers are not buying as much as they used to in the past. People's wallets are shrinking. Rising cost of living and all the different issues that are surrounding buying and selling today. Customers' loyalty is shifting from brands to brand. So we want to really have a time to discuss how we can actually win in this market. And that's why we are here today. We've brought together very interesting industry leaders to share their experience with us. But before we get into all of that, right, I would like us to play a game. So this is an icebreaker. It's still morning, so that's why I picked this icebreaker. So are you a coffee person or a tea person? Let's know, A or B. Napa coffee. Anyone else? These days I'm tilting towards coffee, and I think it's peer pressure. Napa says tea after 12. Chika is also coffee. Elizabeth is tea. Okay. Now I want to break tables, and after tables with the next icebreaker we are going to be playing. Okay, so this one, who drives the most impact in FMCG? Is it sales or marketing? You can come off mute too if you want to defend your points. Okay, some people are saying sales, some people marketing. Love says A, Napa says B. Napa, you don't want people to drag you, right? That's why you're saying B. Okay. Idara says marketing. Elizabeth says sales. Napa says I have to say B. Okay. Chika A. Napa, your B. We've heard you now. Okay. I love this. Daniel marketing, Toby sales, Napa B again. Okay, so thank you everyone for sharing your thoughts on this. We know that every role has a significant role they play to make things work together. So now I will be introducing our facilitators, but I will be doing that one at a time. So before each of their sessions, I will read their bio. But for today, we've brought in four industry leaders who have worked, scaled, and led different sales, commercial teams, brand teams across Africa's toughest markets, actually. So we'll be hearing from them. They'll be sharing strategies, insights, and sharing from their experiences, really. And at the end of today's session, I want us to leave here with valuable insights we've learned from them, right? So this is what you're going to expect from this session today. We'll be here from 10 a.m. to 1 p.m. It's a 3-hour session. I promise you that it's going to be worth your time. So we're going to be getting clarity on key economic trends that are shaping FMCG markets and consumer behavior. We're going to be learning practical strategies to boost sales and reduce costs, understand how to lead and retain a high-performing sales team. And there will be enough time for Q&A. We are going to have a fireside chat with our speakers. As we go ahead today, I don't know why this is not moving, but okay, it's responded now. Okay, so this is our agenda. Our first session is going to run for 30 minutes. So we'll have Dr. Abiodun take us through economic outlook for FMCG brands in Nigeria. And once he's done with his session, we'll move on to Alex Goma. If you've heard about Alex Goma before in FMCG, you would know that they call him the father of FMCG sales, I guess. So he's going to be talking about delivering commercial success in tough times. And he's going to be talking to us for 45 minutes. And the next session would be on leading sales team through uncertainty. And we'll have Napa Onwusah speak with us for 30 minutes before moving on to our fireside chat to cap everything. And during the fireside chat, we're going to be speaking on navigating the future, economic trends, and commercial strategies for FMCG success. That's going to run for about 50 minutes. I promise you it's going to be worth your time today. I would like you to do me a favor as we get started. Please turn on your camera if you can. Grab your notebook. Let's be present. Let's take this since you're here now. Let's enjoy the full experience. Take notes, engage, share, ask questions. Really, during any of the sessions, you can drop your questions in the comments, and we would pick it up once the facilitator is done with the presentation. I hope that's fine. Can I see thumbs up? If we're on the same page, let me see thumbs up. Okay. Thank you so much. So now I will be bringing up Dr. Abiodun to take us for the next 30 minutes on economic outlook for FMCG brands in Nigeria. So while I read his bio, I think he can start setting up his screen while I just introduce him very quickly. Dr. Abiodun Ajiborode is a leading marketing strategist, and he's the founder of Brand Management Academy. He has about 2 decades of experience, in fact, more than 2 decades actually, of driving growth for brands and talent. He is one of the top 20 CMO awardees. He has also worked with really big and interesting brands like Coca-Cola, PZ, Promasidero, and Brand Oath. And he's known for his impactful work as a speaker, a trainer, and a business coach. Dr. Abiodun, how are you doing today? Can you hear me? I can't seem to hear you.
Yes, I can hear you.
Okay.
You can hear me. Awesome. Please confirm you can also see my screen.
Yes, we can see your screen now.
Okay. So back to your question. I'm doing fine. Thank you very much, Stacey.
You're welcome. So the floor is yours, actually. I have my notepad here. I hope everyone does as well. So I'm ready to take notes and learn. Okay, thank you.
All right. Thank you very much, everyone. Good morning. I'm here with Alex. So whatsoever blunder I correct, I made Alex is there to bail me out. So that's my moment. Okay. Thank you very much, Revenue Lab, for bringing me to join Alex this talk. And everyone, thank you very much. Nigeria has been very interesting in the last, to be honest, since May 29, 2020, I think 4 now, yeah, exactly. So since the pronouncement of subsidies done, we've had a lot of drift here. So it's been interesting. So my assignment is to try and justify or give a kind of clarity of what the what the economic ecosystem look like. I'll try as much as possible to point to necessary gaps. Let's go straight to what we need to do. Um, like I said, we all know that Nigeria without that has been shaken by different policies, different things. Um, like I was discussing with some people, I said last year it was all about experimentation of policy. It was even the CBN doesn't at some point got confused. But I think we are beginning to see a lot of settling because some of those learning curves have been mastered, and we're beginning to see some of the apart from insurgency that we've been not able to tap. So in 2025, to be honest, we've seen a lot of stability in some things. And I will delve into those things. I will start with the macro, then talk about the FMCG, since that is why we're here. Then talk about some sectoral implication for FMCG, and then be able to also let you know what are the coping mechanisms that a lot of organizations have in place to navigate the volatility in the policy and in the environment as a case. So starting with the FX fluctuation, of course, this persists, and but like I said, we've seen a bit of stability moving between 1,500, 1,600. And I think in the last few months, it's been within that space. That's given a lot of stability to organizations, not just FMCG sectors, other sectors to plan effectively. Unlike what we saw between when the government took over, the new administration took over, and up until maybe last year, December, it was like you can't even plan for a day. Today is 1,700, tomorrow is 1,900, so it's back, it's small, and it was creating a lot of problems for leaders, for businesses to actually do a long-term plan. You can't even do a short-term plan effectively. You have to probably build your plan on a daily basis. I know of companies that increase their prices like 20 times within a quarter. Just taking it because it was volatility. But we've seen a lot of stability and a lot of organizations to look at that. Inflation, both nominal and food inflation has been significantly on the high. Largely driven by food inflation. When you look at the amount of things that goes into food production, you realize that is the main driver of inflation in Nigeria, I think, because however, like I said, it's been on the decline since January. These are factors leading to some decisions by CPN, decisions by the present government to intervene into a lot of importation tax, support for agriculture, and you can see a lot of movement in that space. But it's still on the high side of inflation. More importantly, MPR has been stable. It's been stable since November 2024. Before then, it was neither here nor there. So I think CBN put a peg on it at 27.5 in November. That has remained up until even now. That's remained. So currently it's still 27.5. So but before then, if you look at from May 2023, you can see what happened. It was stable up until 2024 when subsidies don't happen, and then you can see how it's kept moving, But now we've seen a bit of balance. But I will talk about the implication of some of these things when we get into that. Now, another thing is the electricity cost. This is key on the high side. There are other propositions by the minister that the tariff is still going to go up. But when you take a case study of EKBC, you see that uh, the electricity is at 25. When you talk about band A, then when you look at band B and B, you see that technically the tariff is on the high side. If you want to get a substantial amount of time on the grid. All of these things are gearing towards something that I will explain later, because ultimately these things are increasing cost of manufacturing. FMCG are the first, set of industry that are being affected likely with all of these policies that increase cost. Lately, I know that telcos have been fighting for increase in tariff, and NCC eventually approved it, I think about 3 months ago. And it took 50% hike in tariff to cost data SMSs. And you will also understand that this have implication on the business. We use data to run our SAPs, to run our Salesforce automation process. All the sales reps, all the marketing people, they use data, they use core credit to actually run their operations. So all of these things are having significant impact on the cost of operation. And up until January, because I know a lot of opposition and postulations against 2025 that petrol is going to go up and diesel is going to go up and all of that. But my prediction during that period, because of Dangote coming in, and there's a partnership between Dangote and MRS, which is the Dangote family, which literally is going to give in Dangote at a very low cost. And I know that the competition, the competitive market, when you get at 900 thereabout that it's promised there, I knew definitely that would force other people down. Exactly that was what they're buying. They're buying fuel at 875, 860 or thereabout now, and that is different from that. So, however, the cost of haulage is still high, because technically fuel is just one aspect of it. Second aspect of it is when you talk about spare parts, and the FX is still affecting spare parts. So moving product from Lagos to the east, to the west, to either any part of Nigeria is still on the very high side. So those are also costs that are affecting FMCG. Now, another cost that is, that has been looming and then is becoming obvious is a cost of people, because a lot of talent are migrating out of the country through Japa syndromes, and you realize that the sharp one, the intelligent one, the experienced ones are now becoming a bit more expensive because it is a talent war. So these are also impacting on the overall cost of the business. Now, what are the implications of this? Apart from the fact that this is impacting the cost of the production, then begin to see trade demanding credit support, because with the high APR, they can't access more facilities, and they have to depend on the organization to extend credit. And then organizations are a bit more sticky now. They are sticking to extend credit because you can't even tell a trader today, a distributor today, tomorrow you find that they're already in Canada. So a lot of people are very, very scared of doing some of these things, and you see a lot of the only thing people are doing are now doing bank guarantee to actually say, okay, yeah, we can tell you that, we can tell the bank to give you money on the account that you're dealing with us, but we're not going to carry that risk. So a lot of things are happening within that trade space, and I see a lot of people demanding more margin because the profitability has shrunk, because a lot of things are happening to consumers that is affecting the velocity of product movement in the trade. Now, consumers are demanding more value, and they are trading up, as like Stacey said. A lot of the top brands, premium brands are feeling the heat. People are trading out significantly and looking for alternate solutions to their problem, to their needs. So consumers, with their little amount of money that is available to them, they are often demanding for more value. That's what we are saying. So let's look at what does this then mean literally for an FMCG sector. So an FMCG sector, I try to break it down into different pillars. One, manufacturer as an entity. Manufacturers are beginning to look at different, different way of managing this antics and this fluctuation in the economic dynamics. So, for instance, you see a lot of price moderation going on. Price moderation meaning that people are organizations are beginning to master technically how to to sort of oscillate their pricing for a period of time. So you can decide to have price being taken every month, making sure that you are keeping that sanity of profitability even within the days and dynamics operating environment. Second thing I see happening is price fixing. Price fixing is technically a strategy that is used for you to lock down rates or to lock down, you want to lock down the supply. So a lot of things are happening in that space. Whether FX price fixing, we are locking down the supplier from giving you an input material for a period of time on a rate. So a lot of things are happening. And you see a lot of bulk buying. So people are not doing, small purchase now because you can't tell what happens to the pricing. So a lot of people are investing in bulk buying. And we're beginning to see beyond competition. I've seen instances in which competitors are beginning to do collaborative purchase. So they come together, they are competitors. But if the base product is the same, we come together to beat the price down. We buy the base products, we divide, everybody takes his own share, but we gain that bulk purchase. And we have a lot of that going on. We can then go and do our marketing and it's smarter than the other, but this it gives us opportunity to make more money and to save more cost. We see a lot of backward integration happening because a lot of people are beginning to see that, hey, if we depend on importation for life, it's going to keep affecting us because you can't dictate what happens. There's a looming FX problem that is still we are seeing now with Israel starting another problem. If this continues, then the borders that were open before, before 2025, a lot of shipping instead of going through direct has to go through very long route to avoid the war zones. And that increased the cost of shipment. And now that Israel is coming back, we might have that kind of thing repeating itself. So a lot of people are looking at alternate solutions to their production. So there are a lot of backward integrations happening here and there. Some manufacturers are also looking to opportunity of reducing costs, and then you have a lot of people gravitating towards direct retail and direct to consumers, and it's becoming a very big thing for organization. Cut off significant cost from distributor to wholesalers. See a lot of that happening. Another coping mechanism is, degramming. Degramming means that you move from maybe 50 grams to 44, 50 to 45 grams. So these are means of managing the cost because you literally can't still increase the price because there is a level in which you can pass the price to consumer, and consumer won't be able to do that. So a lot of degramming people are using that as a coping mechanism. There is a BOM optimization. BOM is bill of material. Bill of material are the components of what is used to manufacture products. So a lot of companies are beginning to look at how do we optimize this bill of material. Are there substitutes that we can use that are cheaper, that doesn't compromise the value of the brand? A lot of companies are beginning to gravitate towards that. And we have people now going lean structure instead of very bogus and expansive structure. You see a lot of people doing very lean structure from an operational point of view, from even what we call it, from a people's point of view. So there's no layer again. These are all cost reduction kind of means. And lastly, we have a lot of operations optimization. People are looking for how do we streamline, how do we manage complexity on the line? Well, these are the things that helps you save cost of production. For instance, if your line, you don't have to shut your line down for maintenance or for changeover. You realize literally that what do you call it? You realize literally that you can manage the cost and still be competitive in the market. I'll give you a classic example, and I wrote it there. Trophy, and Castle use the same bottle. Castle has his own proprietary bottle, and it's interesting that Castle came to Nigeria, and because of challenges of production of glass, because there's only few glass production plants that are available, so they have to adopt to start using it. Yeah, I don't buy that. Yeah, because again, they're beginning to rubbish the equity of the brand. But again, if the leadership of the business have decided to say, let's streamline the operation and let's just do the same line, same bottle for it. It helps them save costs. They use the same assets for different offerings. But like I said, that could have an implication on the equity of the brand. That's a different conversation for another. But these are some of the things that people are beginning to do. They're beginning to use and look at what we currently have. How can we optimize it? How can we expand usage? So think about what Pepsi did. Your 7-Up bottling company did during COVID. There was a capacity that wasn't utilized. Then they threw Too Sure into that space. And today, Too Sure is significantly, if not more than $1 billion kind of business. Exactly, that's what a lot of organizations are looking at in open. Because the more production you can do, you drive your cost of production down, and then that gives you opportunity to make more money. Now, from a consumer end, we see a lot of open things. Consumers, like I said, are trading down. Like Tracy said, switching is now very, very obvious. People move from one brand to the other. If they see that your price is above what their pocket can afford, they switch to something. So switching is very, very it has become very rapid. And that's again, is telling you that brand loyalty is technically going out of the book. So nobody is literally loyal to any brand except from a medical point of view. If you're using a drug to actually deal with ailment, it's very, very, it's a very what do we call it, high switching cost. Low switching cost, because a lot of people experiment with it. But any other thing in that space, people move quickly because of what is available in their pockets. A lot of people are switching to small pack sizes because to buy the popcorn might be a bit difficult. So people are utilizations have become very, very interesting now, because you can buy on a daily basis. So you buy 6-pack, you use it for this week, you buy another 6-pack, because those are the mechanism to actually manage wastage and to optimize their income. A lot of people are looking for multi-use solutions that I can use for different. I can use this soap to actually bath, to actually work clean. So you see, multi-purpose have been what people are journey towards. A lot of people are, from a consumer point of view, are embracing customization, personalization. And I see this happening significantly in the perfume industry. You see people who mix perfume now doing it really very well. Because to go and buy a Gucci, to go and buy this is an arm and a leg. So if I can have somebody who has a solution that can deliver that kind of can deliver that kind of scent or perfume, to me, I see a lot of people that related towards that. Online shopping is becoming, an attraction. People are becoming more comfortable online. So most of the companies are now, gravitating towards solidifying their online capability. And then the last thing on the consumer point of view is cost over value. People are essentially, aspirational in nature. However, they are then beginning to say, if you are expensive, regardless of whatsoever you promise as a value, and do something else that is less expensive. And this is what we say. From a trade point of view, we're beginning to see low inventory turnover because the velocity has reduced from the trade. So a lot of these people, a lot of traders are not able to sell more as they used to sell. So and there's because the cost of restocking can be guaranteed. If you buy today at 1,500 for the sake of argument, tomorrow you can't tell whether you buy for 1,006. So a lot of them are literally looking for opportunity to manage the risk and then ensuring that they are only taking into consideration what they think can get out of the trade as quick as possible. There's a lack of structural finance, and like I said the other time, because of the NPR issue, a lot of them are looking for alternate source of financing. We see a lot of private label rising in the trade, and we go to modern trade, you don't see some brands, and you go even into some supermarkets, they begin to have their brand. Those of hotels, they begin to have their brand, and this is what will continue because the people are beginning to look for a way of actually reducing their cost of operation. Like I said, there's direct to consumer, it's accelerating, and there is high default rate in that space. The reason is that if I can't sell or I don't have access to loan, and the question is, where will I see the money to pay whatsoever credit? So you see a lot of people, instead of paying that, they default or they change their location. So there are a lot of things going on within that space now. And more importantly, traders are gravitating largely towards low value items because of their working capital is small. Somebody who has a retail store that probably the total inventory cost there is 150,000 naira. You can't ask that person to come and buy a pack of wine that costs 60,000 naira because it means that you only buy two. So they are looking for something. So they buy the sachet one, they buy the small one that can afford them to fill their stock. These are things that are happening in the trade. And literally all of these things are affecting the FMCG sectors from what is happening to the consumer, what is happening to trade, and likely even within the economic space. Now, I love this quote that said, when the wind of change blows, a lot of people build war. And when you build war, is that you want to shift yourself from the change. You don't want to adopt the change, and you build a kind of formidable wall around it. However, some who are very smart understand how to navigate the wind, so they build a windmills. Building a windmills means you are navigating, you are embracing the change, but you are ensuring that that you can master the change, and then ensuring that you can get the best out of the change. Now, technically, looked at these four things to say Nigeria economy terrain is tough, but technically not hopeless. The consumer behavior is shifting fast, and even trade is evolving. However, some of the organizations who understand how to navigate this are mastering this, and they are changing their strategy for time to actually take advantage of the changes. While some others are shutting down, relocating, and struggling to survive. There is opportunity in the micro threats that is untapped. Likely, survivor brands have mastered the adaptation of that, like I said. So there is no terrain. I think it was myself and Alex that were discussing this when this started. This was a repetition of 2015. It has happened before, where dollars were moving almost every week. So it's not something that is new. It just requires strategic leaders to understand that your position can be fixed. It has to be flexible in such a way. You must have mastery of scenario planning and understand strategic thinking so that you can have different solutions for different types of scenario that you right. That's technically what works in this particular environment. So I'll take a question if you want. If you have questions, you can drop it. I'm sure someone is already addressed it. Thank you very much. That's it for me.
Thank you so much, Dr. Abiodun. This has been packed. So anyone who has questions, we have 5 minutes to take some questions for this session on economic outlook. So if you have a question, please, you can come off mute or share in the chat. Anyone? In the meantime, let me just go through some of the comments shared while Dr. Abiodun was speaking. Napa mentioned markets are shifting because of economic realities. Yes, there's sachetization. Every or most brands are now having a downgraded version of their products, and we're seeing a lot of that. Anyone wants to ask any question at this point? Anyone? Chika says 2015 FMCGs are raising prices of goods almost every 2 weeks. This is so true. And one thing I'm even noticing is brands. There was a time that brands could sit together, maybe at the beginning of the year, and put together a strategy and say this is their marketing strategy or their sales strategy for the year. But in volatile markets like this, I'm not sure that's the best approach anymore because things are changing every day. In fact, maybe every second. So we need to stay agile. We need to be able to move quickly, pivot based on how the market is looking. Okay. If there are no questions for this session, we're still going to have a fireside chat. So please keep your questions coming. Precious says,
Stacy, I think okay.
You said? Okay, I'll just go on. Precious has a question. It's cost over quality now for the consumer. What's the cheapest variant on the shelf that can do the work? Dr. Abiodun, do you understand? Okay, it's a comment, not a question. Okay, yes, you're very right. You're very, very right with this. People are going for cheaper alternatives these days. Even me, yes, I will say that with my full chest. Okay, let me introduce Alex Goma. He's going to be taking us for the next 45 minutes. Alex Goma is the managing consultant at Business Max Consulting and a seasoned FMCG leader with over 20 decades of experience across sales, trade, marketing, logistics, and general management in over 6 countries. He has held senior roles at Glow, PZ, Guinness, British American Tobacco, P&G. He has led different high-performing teams, launched iconic brands, and he has worked with different companies to build sustainable, result-driven organizations. With that, let's give Alex a warm welcome.
Thank you very much, Stacy. Good morning, everyone. What I'm going to share with you are principles and guidelines, that can help you survive during tough and complex times. I don't have a silver bullet. No one has a silver bullet as to what will make you succeed, but there are certain principles that can help us. I think we'll look at the context today. We'll look at what commercial success is, what are some of the principles you can apply, and then what should we focus on to deliver commercial success. But I think every one of us, sometimes when we work, we tend to forget the fact that we're also consumers or customers. And some of us sometimes have a side business on the side. We don't take the lessons or what we see from that and apply it to our full-time jobs. But I'm sure in the last couple of months, we may have switched certain products, we may have stopped buying certain products, or we may have cut back on the quantity of products we're buying. There's a particular reason. The most important thing for us is to open our minds so that we can listen and we don't cast judgment, right? I will add something else to that. We become curious, where Gen Zs have a comment, we listen, we don't judge. I say we listen, we don't judge, we are curious, we seek to understand why. And if we understand why across different sectors or segments of people,
then it is easier for us to understand why things are tough and what they can apply during this period. I think Dr. Abiodun has shared what the economic outlook is like at what speed. In Nigeria, it's always been cyclical. So I always tell people there's nothing new under the sun. What we have seen in the last 2 years happened in 2015, happened when we started the march to democracy, happened at the onset or the change between Obasanjo. So we always find the shifts, right? Which therefore creates turbulence. And usually it's driven by the fact that there are challenges in the way our economy is structured, either from a forex perspective. We have a rent-seeking economy, the lack of the right of the structure, and therefore consumers are challenged. Now, this data that you see will differ or vary depending on the category. Now, what I always tell people is when I look at Nigeria, Nigeria is 4 countries. I've always had that as a principle at the back of my mind, and it's important to understand. There's a country of about 5 to 8 million that are economically very strong, probably have the same GDP per head as most developed countries in the world. Therefore, when you have a downturn in the economy, they are not as impacted as the rest of the people. There's a second country of between 8 to 13 million who are doing fine. Yes, they will face some challenges, they will shrink a bit, but usually will not make a lot of changes. There's a struggling country, which is between 15 to 30 million people. And then at the bottom of the chain are those who are striving to survive. And usually they are the ones that will be impacted the most when you have a downturn, and therefore you will see some of that switching. Now, a lot of premium brands and maybe mid-place brands see growth when the economy is booming. That's because people are aspirational. So when people are aspirational, even though they don't have money in their pockets for things they're trying to achieve, what they tend to do is show their aspiration through the kind of products they are consuming or using. So I may live in Ajambadi or or somewhere in the backwaters of Lagos, but my aspiration is to move to Banana Island. But until I get there, I might show my aspiration through the premium brand that I consume or take. It might be once a week, it might be when I have that week. And that shows the volume when things are moving. But when things become hard, those are some of the changes and switches that will happen. So it's important to understand that, yes, while this number looks at overall, it varies by category, it varies by the kind of products that we are selling or passing across to consumers. Now, I'm not going to go deeply into this, but Dr. Abiodun has already shared with us what is driving the challenge in the economy. It's likely inflation, cash crunch, driving costs for companies, and therefore impacting consumers. And a sentiment survey actually showed that, okay, the 3 challenges have been the rapid growth in the price of goods and services, high fuel costs, and of course, rising unemployment, because as companies start to struggle, one of the first things is they start to lay off. And once they start to lay off, the companies start to go under, people lose jobs, therefore there's a loss of income. Again, have it at the back of the mind, the 4 countries that I say were made of. One critical thing is to understand that country 1 to 3 usually take care of country 4. So when things start to become squeezed, the people who are taken care of who are in country 4 are also going to suffer, because the things that we're sharing or sending, or how money we're sending back to them will start to show. If you look at data that shows the amount of transfers or cash transactions or things that are done out of banks, you see a lot of them largely are happening out of Lagos. But the share of the market when it comes to consumption is not happening in Lagos, which means that that money is being transferred elsewhere for the people in those backwaters to therefore use to fund their consumption and everything. So that's the kind of impact you get when inflation happens. And when this happens, then people become more cost conscious, We're trading down, we're looking for lower priced options, we're actually shifting to different categories, or we're adopting new behaviors to solve the problem. I think we've got to understand that our products or services are helping to solve a problem. It is the solution to the problem that the consumers are paying for. When things are tough, consumers start to think, how else can I solve this problem? So if I'm hungry, right, if I have money in my pocket, I might choose to solve the problem of my hunger, plus also how I want to be seen by going to a restaurant that charges a bit more. But if I don't have a lot of money, I now have to choose between, do I want to be seen as living large, or do I want to first fix my hunger? So there are trade-offs that start to happen, and this is what starts to affect choices that people make. But despite the tough challenges, there are huge opportunities, and technology is playing a huge role in breaking down barriers. Technology is also creating access for people to generate new jobs, new businesses, new streams of incomes, as other streams of incomes are slowing down. So the key thing is to always think, yes, things are tough. Yes, the economy is down. However, what are the opportunities for us to grow? And sometimes, during tough times, it becomes a very easy excuse for people, especially sales team, to say we can't sell because the economy is bad. So as a sales leader in the past, I have seen all sorts of excuses. Why can't we sell? The bridge to this town broke down, so we couldn't. But I said, when I look across the SKUs, we had 3 SKUs that had exceeded their budget. Did the bridge select the SKUs it was going to affect or not? So when I look at a couple of companies, I'm not going to call their names. One was in a sector where you will say this sector is not a sector that is critical. Because when you're selling things like ice cream, you would assume that ice cream is optional for people, especially in tough times. In the last 2 years, they have grown their business over 40%, both in volume and value. So while some of their competitors are complaining and saying we can't sell because the economy is down, people are not choosing or people are not selecting ice cream. So if you focus on the problem, you're not going to find the solutions. If you think deeply about your execution of what you're doing right or wrongly, you're going to find out that you have better options on how to do that. So what does commercial success look like? Because I think it's important to find out. One is sustainable revenue growth. It means we're growing our revenues profitably. We are also keeping our customers, and we're able to acquire new customers. We're able to manage our costs and drive operational efficiency. And despite the tough times, our teams are motivated and they are resilient. Most of all, we're learning how to use the data, and we're very agile. We're switching because as things are happening, we are switching, we're moving quickly. What I've seen, especially in my short stint doing consulting for a number of companies, I have taken data being owned by the companies and brought out insights. And most times I've been asked, how come you can see these things and we can't see them? It's the way we structured ourselves, it's the way we're not willing to listen to the people who are at the front line, is the way we're sat in the head office and we're not willing to go back and go to the marketplace so that we get a true sense of smell of what is happening, and therefore we can make the right kind of decisions when we're facing tough times. Now, when the economy is challenged, there are certain shifts in perception of value and the choices they have to make. And this shift is a function of what did we do when we have good times. There are times when we have good times, and sometimes it's because it's falling on us. It's not because we've done the right things. So when we are now struggling during tough times, it is important to go back to look at the fundamentals. What's the reputation we have with customers? What's the strength of our brand? What's the quality of the service levels that we give? What's our product quality? And our pricing, does it reflect the value that the consumer is expecting from us? So when people are challenged economically and they have to make choices, they start to ask the questions that they do not ask. You know, when you have a lot of money, it is easier to be less rational in your decision making because you don't think twice. You walk into a store, you don't even ask how much is this. You just take it to the checkout counter because whatever the value is, you know that there's sufficient money in your bank balance to be able to accommodate that charge. But when you don't, you start to question and you start to say, you know, this thing is not so much better than this. That's the kind of rationality that people start to bring in when tough times happen. So it gives us an opportunity to go back to our business fundamentals and look at the things that we're trying to solve and understand whether, okay, this shift that we're seeing are shifts that are affecting the way we do business and whether we've been right to make sure that this works for us. So I think it's important that we understand this. And so when things are tough, it's a time for us to go back and start looking at this fundamental. Now, what are the things that you have to think about? Fundamentally, for every business, there are three key battles you're trying to fight at every point. The first battle is when a consumer is thinking of a particular need that they want to satisfy, which brand comes to mind? If you are the brand that comes to mind, you actually won that battle. But the key thing is, if they go to the point of purchase and they are going to make a decision that you are available. Now, a lot of times, a lot of brands, because we have one or two dominant brands or one or two dominant SKUs, we don't pay attention to the reach of our portfolio. And usually when people start to downtrade, it's bigger brands that suffer. We therefore can't think of other solutions. Meanwhile, we neglected the other aspects of our portfolio that could have helped us to manage this particular downturn. So it's important to think about, okay, am I winning in the minds of the consumers? Am I winning when they go to purchase? Am I visible to my pricing brands? Am I available? And then, of course, when they buy these brands, does the brand deliver on the promise? Does the product work for us based on what we promise them? Is it easier? Is it easier for the trade to manage this brand? Are they not making any losses? So it is critical to go back again and ask yourself, each time we're going through this kind of challenge, where exactly should we start to twist and put the focus on? Which is the most critical for the consumer at this point? You know, at the beginning, the table was being, there was an attempt to shatter the table about whether it was sales or marketing that is more important. No. There's none that is more important than the other. These three battles have to coincide. Mind of the consumer is largely led by marketing. However, the sales team plays a big role because when you execute visibility well in trade, you can also create some winning in the mind of the consumer. Point of purchase, sales team leads, but if you place product and there's no pull, then the trade starts to push back on the product. So again, marketing supports by driving. So it is not an either or situation. We need both working together to make sure that we win. But it's important to understand which should you put a focus more on, especially when things are tight. What kind of, even when we're trying to do ads or anything promotional, what should be the focus of the kind of activity that we're trying to get to? Is it that time we should focus on awareness, or should we be focusing on creating offtake from the shelf? Because that's what is critical for them. So we would have to see investments or shifts in investment to ensure that this happens. Sales and marketing therefore have to collaborate to make sure it happens. And then point of usage is managed for us by supply chain or the operations that ensures that the product delivers. it's not just about the product for the consumer. It is also the impact on the trade. If your packaging is faulty and you've always been having challenges, customers have been complaining, but you're getting good goods and cool, okay, it's not an issue. But when your products are now sticking on the shelf, the damages are now becoming a cost to them. Even though your product is sought after by consumers, the fact that they're losing money because of damages means that you start to lose sales. So again, you cannot say sales or marketing or operations are important. So the true businesses, the businesses that survive, are those that understand that these three battles are won together. They are won by collaboration, and we have to understand during the tough times which is more critical, which one leads to creating more value for the consumer and the customer, and that's where we put the focus and emphasis to ensure that we can win during these tough times. Consumers will always make choices. We also have to make choices about how we execute the 4 Ps in response to the choices that the consumers are making. I think Dr. Abiodun alluded to some of this in some of the options that he gave. If a consumer wants the product but cannot afford because the amount of money is limited, what therefore we downsize the product so he still have access to it. Therefore, we can still maintain our profitability. We can still make sure that the product is available. So it will always be a balance between benefit and cost. And somebody asked the question, should we look at cost and quality? So I will put a held warning towards that. The quality that the consumer is willing to pay for is what you should focus on. But in doing that, you have to understand that there's a difference between your target consumers and there's a difference between the secondary or tertiary consumers, because you might be solving a problem for secondary and tertiary, but you might be creating a goal for your brand. Because these tough times don't last forever. So the successful companies use tough times to rejig their businesses, to rejig what they do, and then that puts them on a trajectory for very, very strong growth. So during tough times, they grow at very slow levels, but when the economy starts to pick up, they're the ones that have the opportunity to grow the fastest. So the choices we have to make in how we execute the 4 Ps that allow us to win those 3 main battles have to be in response to the choices the consumers are making, which means we must understand the data. How quickly are we getting the data? How quickly are we analyzing the data? How agile are we making the choices that we have to make? And in one of the businesses I was in the past, 2015 downturn and all of these changes, we decided to buy and keep bonds in advance. It was huge capex cost, but we knew that because of the rapid changes in dollar prices, you will not have time to meet the lead times to change your sizes, because the lead time for one of those guys that changes sizes of soap is about 8 months. So we basically did simulations up to 1,000. The dollar was at 150. We did simulations up to 1,000 naira. And then we started to, so at some point we increase price, at some point we reduce the grammage. And we played with that depending on where we're at. The naira went to 600 and then dropped down to 350 and stabilized at 450. But because we were proactive, we actually took advantage, we could reply immediately, and we actually made some of the highest profits during that period where things were tough at that time. So the choices will have to be in response to the choices that the consumers are making. What are some of the key principles for winning? The first thing is that this is the time it calls for you to have clarity of purpose and priorities. Don't give your sales team or your marketing team 20 things to work on. We are going to work on 3 things. For the next 1 year, we're going to do 3 things. Yes, a lot of people will have pride. Oh, we have a budget, we planned this activity, we have put this in place, and we've done this, we've done this. No, this is a time for ruthless focus. What are the things we're going to focus on? So look at the segments that will give you scale and the impact and the results will be rapid, and therefore you can play with that. Look at your portfolio and how you can tweak your portfolio and how you can play with that. Try to make sure that you can use your portfolio and your 4 Ps to ensure that to remain relevant in the market. The second is operational discipline, right? And this is one area where, again, like I said, working with a number of businesses, I see that. A lot of businesses will tell you that, oh, our salespeople have to do 30 calls per day. The reports are telling them that they're doing 30 calls per day. In a recent work that I did, we went out and I asked the area manager, okay, bring out your clock, let's start measuring. By the time we get to each call. And we're finding out that the call was taking up to 30 minutes. Now I said, how many calls are they supposed to make? So it's 30 calls, 30 minutes, multiply that, let's put travel time. But your reports are showing that you guys are achieving the 30 minutes. It's not true. So you've got to choose, right? Do I want the right things done, the right amount of depth in each call to make sure that we survive? Do I want to sell more to existing customers, and what amount of time do I spend on finding new customers or creating new reach for some of my brands? So I got to look at that. So eliminate your inefficiencies. There are some things that are nice to have. When we have money, okay, we can do all of those fancy things. In tough times, we have to focus on the things that are clear. We've got to tighten execution and accountability, and this is around the sales drivers. Are we covering the right outlets? And when we're in the right outlets, are we executing what we said we're going to do? And how can we simplify processes? Can we make it easier for the teams at the regional area levels on the field to be able to take certain decisions, for them to be able to adapt? Can we free them to make sure that they can execute? Because these things will ensure that you're rapidly adapting to rapid changes within the marketplace. Set clear targets, give responsibility, and hold them to account. And this is also the period to leave head office and go to the field and spend time with the people. And go to the field and spend time with the people is not to go to Abuja and Port Harcourt, because we like those places, because they are the nice places. We can always have nice hangouts after this. No, this is time to go to Maiduguri, this is time to go to Sokoto, this is time to go to everywhere where the sales team will be energized to see that, okay, the leadership owns and responsibility, and also is sharing the accountability for the delivery of the results. Delivering commercial success requires you to focus on the following things. You've got to always focus on the customer, right? Focus on access, focus on affordability, focus on the relevance, both for the consumer and the customer, either the retailer or the wholesaler or the distributor or dealer who is working through your product. Win through empathy. Show that you understand that, okay, they're going through tough times. Yes, you want them to hit their target. Yes, you have to find a way to encourage them and push them. You have to show them that this is a win-win situation, and you also have to show how are you bending over backwards to ensure that service levels are bottom. This is a time where you will have to tweak. Okay, we want to have a full shopping. Okay, we have to manage that. What is it that we can give to make sure that, okay, they still have the product, right? And we can show your key customers that you are willing to stand by them. You may have to take some risks, right? But this is a time when you end up supporting the customers. When you focus on rewarding those who have been loyal to you with consistency and care, you will be amazed the kind of results that you have. You've got to look at your sales innovation and route to market excellence. What are the things you're doing in terms of pricing, in terms of packaging, in terms of the flexibility for you to sell, right? How do you leverage informal retail and sales that can happen through mobile? Yes, our reps have to do 30 calls per day, but we have pre-calls that can happen. Can we therefore do easier deliveries? Therefore, we can cover a lot more outlets. Yes, and we can have the outlets where we want to build new distribution, but there are things where we just have to deliver. We have to make sure that they have availability. How can we then adapt our route to market to ensure that we have localized distribution and logistics efficiency? Culture is critical. Your sales team have to have a sense of belief. You've got to energize the team with clear goals and recognition. You've got to promote transparency and trust. You've got to reward resilience, creativity, and results. Yes, we're going to cut down things, but this is not the time you tell them. You sell to them why we're doing it. You work with them to get them to own why are we doing this. Let them come up with solutions, and therefore you work with them. They're going to make mistakes. This is not the time to happen to mistakes, it's just to make sure that we learn from them, we don't repeat it. But we have to try things. You've got to be willing to take some risk to make sure it happens. And then, of course, your agility using data as superpowers. Use data to track demand and market signals, empower your team to make quick decisions. And then when you have new ideas, you know what? Hey, it is risky, we're not sure. Try it in one place, right? Try it in one area. It works, then quickly scale rapidly so that you can get results. If you do this, you're able to find out that, okay, you get a lot of results within this particular area. Culture is most critical because the winning mindset requires resilience, resourcefulness, and relentlessness. Resilience doesn't mean that you're going to kill your people. It's not by putting 200 bags on the donkey that you build resilience. It is to energize them, help them understand that we're in tough times. So no denial. We're in tough times. Also understand that there are opportunities. So how do we help people see the opportunities and understand that, okay, when you face doubt, it is okay. And so we then energize them to build the confidence, we can motivate them, give them tips and ways to protect themselves, and then also how we can drive change. Turn adversity into opportunity. How can we achieve more with less? This is a time to stretch their thinking. Okay, we're not going to change the target, but we're going to measure the gap versus the target, and what we will be doing is we will focus on how we close the gap. So every time when the team comes, okay, we acknowledge the gap, we acknowledge your effort, show me new ideas to close the gap. So we're not giving up, we're not accepting. I see your estimates, I see what you're telling me is likely, but you have to start forcing your team to think of solutions. Because if you start to think of, oh, we can adjust the target, we can do this, okay, we can accept this, then what will happen is that gradually the goalposts will start to shrink. Your team has to have a mindset of, we committed to this number, we're not giving up on the number, but we recognize that the number is challenging. But at every point, we're measuring where we are, we're showing the gap towards the number that we achieved, we look for, and we're pushing and stretching ourselves to achieve more. It is a time to cut costs, but it means that we still tell the team with lower costs, we still want to achieve what we want. And that's where creativity comes in. That's what allows the team to become innovative. That's what allows the team to start to do the things that shows us that, okay, they are able to apply themselves. They're able to look at a lot of things that they can do. You will be amazed at the resourcefulness of the people that we have on the field and the different kind of solutions that have happened, right? And this will come from across the organization, not just the sales team. This is a time when the sales team, the marketing team, and the supply team all work together. You know, during one of those tough times again in the past, there was a period where we were trying to meet deliveries in December. Everyone knows December is a very short month when it comes to service delivery because basically you're working 2.5 weeks in the month of December. We had to schedule deliveries at midnight, 1 a.m. And the team had to get customers to be ready to accept. And in a place like Lagos where everybody says it's crime and whatever, we actually got this to happen. We got people in head office to give their drivers to actually take new vans that were bought for dealers and go and make deliveries. The whole organization was engaged to make sure that this happened. We had people in marketing sit with the supply team and the logistics team on Christmas Day. They brought food, they brought wine, they brought drinks just to say we're together with you on this fight. This is the kind of thing that you do to drive the entire team to make sure that everyone's together to get this to happen. So the key thing is to understand that you don't plan, you don't wait for the storm to happen for you to start doing all of these things. So you have to learn how to sell in the rain, not to wait for the rain to happen before you do these things. I know that when things are booming, we tend to forget some of these things. We tend to take it easy. We tend to relax because the numbers are becoming easier. We have dealers who are big. Dealers have working capital they can afford to keep, and therefore we can push inventory and get our sales during tough times. They will not. This is when we have to become lean. So you don't wait for the storm to pass, you learn to sell in the rain. So just to conclude my thoughts, and then we can go to questions. The external environment is chaotic. It creates challenges, but it also creates opportunities. Consumers are under economic pressure and they're looking for value. We have to interpret how that value comes about and how to execute our 4Ps in order to deliver that value for them. There are lots of challenges, but also lots of opportunities. Your role, our role, is to make sure that we look at how can we win the battle for mind, place, and usage with the consumers. What are the things we can tweak? How do we show we understand how the consumer is adjusting to the downtime? And then how can we start to do this? How can we lead with courage, innovation, and commercial clarity so that the team understands these are the 2, 3 most important priorities that we have to focus on? Then how can we make sure that our businesses, our teams, the commercial teams, marketing teams, supply teams stay resilient? It requires agility, rigor in execution, focus about the key battles that can be won, that must be won. How do you keep your mental energy? You're going to have some tough times. You're going to run hard and you get 0 sales on some days. How do you focus on what is within your control without losing sight of the battles you're trying to win and understanding that the world will still exist under the downtimes of performance? So in tough times, go down to the sales fundamentals, out-execute your competitors with scale, and you will be pleasantly surprised at the kind of results you will get by doing this. Thank you for your attention, and if you have questions, we can take the questions now.
This was a lot. Thank you so much, Alex. My note is full, actually. So any question anyone has, we'll take it at this point. Alex has given us about 13 minutes thereabouts. We have some questions in the chat. So while we take those ones first, if you have a question you want to ask, you can put your hand up using the emoji and we would take your question. So let's start with this question. Is someone saying something? Okay. How can small to medium-sized FMCG brands compete with bigger players without burning through budgets? Alex, can you help us respond to the question?
So I think without big budgets, you have to be very, very clear about what it takes for you to win, and therefore where your investments are. Simple example I always give people is when you look at Nigeria, a lot of people try to launch and win and compete across. I say no. Pick a few cities, right? Have a key city approach and say, okay, first of all, where's the money? Where's the income? Where's the opportunity from a retail perspective where consumers are buying? Where if you focus on the retail fundamentals, you can win. So the first thing I would say, pick a few cities and then go modular. So if I take 4 or 5 key cities in the first place and just build scale and depth within those cities. Some of us try to disperse ourselves. We're trying to, you know what I say, okay, you haven't won in Lagos, right? But there's somebody who is ordering from Akure, and you therefore want to go and set it in Akure. No. Let me have 4 teams in Lagos. If I win in Lagos, if I win in Abuja, if I win in Port Harcourt, if I win in this, then I can expand to the next, I can expand to the next. If I'm going to spread through my market and I have to choose what is the most critical for my brand, right? Am I going to be driving do I choose to drive awareness at scale, or do I choose to drive it around where I want to compete with that, where makes sense? When I do that, as I start to grow, I start to form the growth in mind. So one mistake I've seen a lot of people do is to start spending huge amounts of money before the growth actually starts to come, and they're planning on the fact that the growth will come. No, build distribution up to a certain level, have a benchmark. If I get up to 20 or 30% distribution, then I'll start doing this kind of marketing activity. And if I'm doing that kind of marketing activity, what activities will give me the most bang for my buck? You have to understand what your brand is and who you are appealing to. I've seen brands that are low volume and use simple this thing. I was speaking to a business that is in alcohol, and you're going to run activation in a highbrow outlet in Ikoyi, and your brand is never seen or bought by consumers in those highbrow. I said, what you've just done, you've created a party for the people who are in those outlets. And what I can see, because I was in that particular event, the guys are upstairs, they're enjoying your party, they're enjoying your food. When they want to have a drink, they go downstairs to the main bar, buy their particular drink that they have, or you spend money. So at the end of the day, you spend money, the outlet owner is happy, you have your marketing people are happy, you have Facebook likes and whatever. I always ask people, how much is likes? Ego label likes, right? Likes that doesn't translate to money is not this thing. No. Create the engagement, even when you're doing an ad, it's not to create the push to buy, right? It's not to create awareness. As I was coming in, I was listening to a radio ad. And the first line in the radio ad, the first thing that took my mind was to a soap or cleaning product. But by the end of the ad, they were selling a beverage. Now, as far as that consumer is, the marketing person is concerned, oh, this is a fantastic ad. The first line of this was pushing it towards detergent or soap brand, but then it ended up. So it's a confusing message. So sometimes it's also about the quality of the message and how targeted we can. So use your site to be nimble. You can be smart. There are small agencies who are trying to learn, so you don't have to pay expensive money. When an agency comes to you, what I always tell people, do you know my problem? If they can define my problem to me, it tells me that they understand what they need to work for. I don't know if that answers or helps.
Thank you so much, Alex. So to recap for you, okay, Nat, you asked this question. So I would say two things that I picked out from what Alex has said is you need to be rooted. So you're not trying to exhaust yourself doing everything and being everywhere. They know your brand and who you serve. That is your unique value proposition and your ideal customer profile. So you need to sit with yourself and know what that is, right? So I would be taking, okay, before I take the next question, Precious dropped a very brilliant comment here. She says, automating sales calls are great until you realize you cannot box in execution if you want real results. There must be room for deviation so that businesses can learn what is working and what is not. So I think, Alex, she was saying this in response to the people making 30-minute sales calls and how efficient that is. The next question I will be taking, okay, yes, we'll be sharing presentations at the end of the session and the replay as well. Daniel is asking, what's one thing most FMCG companies are still getting wrong in this economy? I would like your thoughts on this, both Alex and Dr. Abiodun. So maybe we start with Alex, then Dr. Abiodun can share as well.
What is it that most companies are getting wrong? I think I would probably say two things. One is true understanding of consumers and how to use your portfolio to meet the needs of the various consumer segments. Like I said, there are two ways you can dice consumers. You can dice consumers from an economic perspective. You can also dice consumers from a tribe's perspective, right? And if you put both together, because to give an example, if I take a tribe, there's people who love adventure. It doesn't matter whether you have, right? If you love adventure, it will show in different ways, right? So if you have that, and then you validate that people who have money, the offerings for the person who has no money, the adventure shows, it's very different for the person who has money. So the person who has lots of money might go and buy an expensive bike, right? And the person who doesn't have money might do an activity that doesn't cost anyone money. What's the relevance of this for my brand? How I speak or what I find, the kind of product service that I offer. So I think one of the things I have seen is that a lot of people just do things in the market without understanding the relevance of the engagement. The second for me is execution in market, right? We don't want to do the rigor of execution, and especially when we're big and we have skill. So we don't go down to ask creditors. We don't go down to understand why we are selling. And I did a work for one of the large companies, and when I showed them some of their brands, it was from their own data. The fact that they were strong in a few areas, but where the market was big, they were not strong. But because they were getting their numbers, they didn't actually realize that they had huge opportunities they were not doing. So it's easy for teams to be comfortable because when we're doing well, we don't ask whether we're doing well enough. So that rigor of showing, are we building the skill for us to be excellent in our execution? You know, in cruise share, we have the volume, therefore automatically we are excellent in marketing. No, automatically we're excellent in sales. No. So for me, I think those are the two areas. Matching your portfolio to the consumer needs and then the rigor of execution. I find a lot of people are missing, which is why when things get tough, a lot of people fumble quickly. That's what I think.
That's brilliant. That's brilliant, Alex. So before we move on to bring Napa up, let's have Dr. Abiodun also share his thoughts on this question. So what's one thing most FMCG companies are still getting wrong in this economy?
Well, I think I'll just lay out what Alex said. I think for me, one is try to fit something into somebody. So SKUs or professional somebody. So we see a lot of people sticking to their loans and not being flexible to come on to something else. That's one thing. But apart from that, there are a lot of things that are happening that require agility in the process, in the systems, and even children. One big item is not doing what we call segmented execution. Segmented execution is when you don't slam the same thing for everything. For instance, there are things that we call micro promotions, which I can have different promotions on the same brand in the same market. So I'm in Ujuwe market. I'm having a different promotion because I understand the subset of the trade. I'm saying the kind of promotion I want to do for this person is different from what I want to do for this person. So it's not just one promotion, and then you don't get responses. You then don't get the right stimulus that you are trying to do to get it. So a lot of things are about segmented execution, about segmented marketing itself. Today, you don't have to use the same communication material the entire Lagos. I might have different communications in different areas of Lagos, despite the fact that it's Lagos. So, for instance, people in my brand, I want to speak to them in Fiji. And people on the island, and I might just speak there in different, but to say what you see is how one can pay. The same, printout blasted everywhere, whether it's cutting through or it's not cutting through, they don't really care. Those are the things that I see that they're still getting. So.
Thank you so much, Dr. Abiodun. And this point you made about the segmented execution, we're also seeing it with social media. Some brands are using the same communication language on LinkedIn and the same way they're communicating on warmer platforms like Instagram, TikTok. So being able to segment your message that way. So we have 1 minute to bring Napa up. Napa, would you like to start setting up your slides while I introduce you? For all the other questions and comments in the chat, we promise we're going to take it. We have good 15 minutes for our fireside chat. So we'll get to all the questions today. Okay. Napa, how are you doing? Are you good? Are you ready?
Yes, I hope you can hear and see me okay.
Yes. Okay, so Napa Onwusah is a business leader with 25 years plus experience across sales, marketing, business development, public policy. And she has a track record that spans how at AWS, Google, Microsoft, Visa, Cisco, Nokia. She has been all around actually. Now she leads the B4B partners team as well as Classic Code Labs, and she has earned recognition from Forbes Africa and as one of the top 100 career women in Africa. She's going to be talking to us about leading teams through uncertainty. Napa, you have the floor.
All right, thank you so much. And thank you everybody for the great emojis I'm seeing. You know, Stacey, I actually forgot I was presenting because Dr. Abiodun's session was so insightful. I got very engaged in some of the metrics and statistics he was sharing. And then, of course, Alex just kind of took us to another place where he made us start thinking more and more about our business. And one of the things he shared, that's Alex, that for me was very insightful was building resilience, right? Being able to think through how you deliver these tough times. So I know some of us on this call are leaders, some of us are being led, but the truth of the matter is you can have all the strategies, and if the leadership is not quite in place, it's going to be very hard to execute some of these ideas and some of the great go-to-market shifts that we're doing, right? So for the next few minutes, I promise not to take too much time. We're going to understand how this uncertainty actually impacts teams and performance. And then we would learn some practical actions, 4 actions you can start taking as a leader in your business to be able to navigate these very uncertain times, and then some frameworks. So the idea is at the end, you're going to walk away with with some guides on how to actually execute some of this. So Stacey said the companies I've worked for, right? And it sounds, it can sound like it's very amazing organizations, right? But when COVID started in one of the companies I worked for, we eventually saw a high spike in revenue, and a lot of digital first companies, tech companies saw that spike. But in the beginning, it was very uncertain and it was very challenging for us to navigate. We had never seen COVID before. Lockdowns was never done globally before. We didn't know how long we would be at home. And for the companies that were tech first, a lot of our consumers had not been educated about how to use technology, right? And it brings to mind what we're experiencing now in the market. And I'm very happy, Chika, you mentioned 2015, where prices were changing every 2 weeks. We didn't have a lot of the GTMs that we're seeing now, like sachet, the way we use sachets. It's actually quite revolutionary when you consider it. But as of that time, it was not as prevalent as we're seeing today. So the question is, for those of us that are in sales, and I do want this to be a bit interactive, so you can use the chat if you want to, what is the most challenging thing about selling products and services in Nigeria right now? I'll be looking out for some of the comments. Yeah, Chika. It was an exciting time going through that 2015. But looking back, it's when you were in it, it was very, very difficult. So some of the challenges people state is rising costs, customers taking longer to buy. And this is very true. But one of the things we do see is that only 22 of employees actually believe their leaders have a clear direction during times of disruption. And these times of disruption, some of you are highlighting it in the chat, balancing price and value. It's a big one, Arthur, right? Because we want to deliver value, but in these economic times, we know that price is the driver of a lot of business decisions, a lot of personal purchases. And then lack of trust, oh my God, building trust. Wale is a big thing. Because we know you need to establish trust for people to buy, but it's taking time, and consumers are in market to buy right now, and they want to buy based on price, right? But what we find is a lot of times leaders don't even know how to navigate this challenge. So as a show of emojis, how many of us have ever flown with a small plane from Lagos or any part of Nigeria to Benin? You can do thumbs up, right? Yes, that flight, when the planes were much smaller, was very harrowing. Yeah, Lagos to Enugu. No, Chika, if you have done Benin, Benin is a special, a special route when the planes were very small. There was a lot of turbulence. And there was one of the flights I was in that unfortunately it was so bad that somebody actually had a panic attack. It was always raining, the weather was bad. And in one of those situations, people started praying, of course, people started panicking, the bins were rattling. This is a true life experience that I used to go through when I used to fly to Benin. Alex mentioned we like to fly to Port Harcourt, Lagos, Abuja. Is true. And on those unfortunate times where I had to fly to Benin for customer engagement, it was very harrowing for me. But the pilots would always say something along these lines. We're flying through unexpected weather we didn't detect beforehand. Ladies and gentlemen, keep your seatbelts fastened. I'm sure a lot of us have heard this kind of, for those of us that fly frequently for work, and I know FMCG companies, we do that a lot. You hear this a lot. The pilot says that. He'll say, ladies and gentlemen, please be aware that make sure you put your tray tables up. We're all used to this. Now, can we imagine if the pilot, instead of telling us that, leaves the cockpit and comes into the plane to start panicking with us, start praying with us, start saying, hey, we're going to crash, so what's going on? Can you imagine that? Right? And I know it sounds funny, but this is how a lot of us lead through turbulent times. We will leave that pilot seat as leaders, we will leave the cockpit, and instead we will come into the cabin with our followers, our employees, our team members, and we will start panicking with them. Hey, the MPR has gone up how many points? Prices have gone down. Our competition has launched a new product. Our customers are leaving, and you're panicking with the people that you're supposed to be leading. So what usually unsettles is not the turbulence, because reflecting on 2015 as a pivotal year for us, and even reflecting on COVID as a pivotal year, we have all seen those times come and go. Turbulence come and go. This season we're in is going to come and go. But what unsettles passengers during those kind of flights is when there's no communication. Imagine if you're in a plane and then suddenly the turbulence starts, there's no communication, and then it seems as if people do not know how to manage, right? So I know it's a very good analogy for those of us that travel quite a bit and have experienced turbulence. But what does turbulence look like in a business environment? There are a couple of indicators that will let us know that our business is suffering a turbulent time. And as I'm explaining, if you're experiencing this currently, or you are the one doing it as a leader in your business, you can just thumbs up. The first one is shifting targets or goals. They like to do this one. Leaders, they'll say do sales quota at the beginning of the quarter. They'll set a sales quota at the beginning. 2 weeks later, they'll revise it because they're trying to match targets and quota to business expenses. And then they don't take into consideration the actual market when they're setting goals. So somebody will say this quarter, we're going to deliver 2 billion, even though quarter over quarter or year over year, the business is declining. So it's unrealistic. Or customer budgets are, yes, I like that, Chika. So what Chika is saying is that you now readjust your destination in the middle of the flight. And then another thing is lack of clarity on what success actually looks like. It's a challenge when the team doesn't even know where are we landing, where are we going. So a lot of times the team will come back and say things like, are we still aiming for the same thing? Has the finish line moved? This is showing that your business is going through turbulence. Another thing is declining customer needs, right? Customers suddenly freeze budgets. All of us that are in sales, we've experienced this one. They will suddenly come and say, our priorities have changed. We're shifting focus. Even though we had committed to this, we are no longer able to achieve this. We're delaying a decision. Second thing is pipeline stages stall unpredictably. You know, for us that are very seasoned salespeople, we know the time distance, the time frame between each of our pipeline stages, right? From discovery to a proposal, typically it may take 60, 90 days. But now suddenly, so for some customers, it takes 10 days. Some customers, it takes 8 months. It becomes very unpredictable. And then there's more objections around pricing and return on investment. Before, it would be like, we want to understand how this delivers value to the organization. Now they're like, no, if I pay for this, what am I getting back? You now see your customers negotiating every single thing, apart from price. There is negotiating delivery timelines. There is negotiating payment milestones. I'm sure a lot of us are seeing this. Before, you could get away with 60% upfront payment, and if it's in fast-moving goods as well, you are able to negotiate large volumes. They're like, no, we want to consume in smaller tranches. So it used to be you could close engagements in 3 weeks, and now it's taking 3 to 6 months, and you're not able to predict. Your business is probably going through turbulence, right? Of course, confusing, infrequent communication from leadership. There are rumors of layoffs. As leaders, we need to really avoid this. As soon as you understand what's going on, you need to let your team know. Budget cuts, restructuring, no updates on what's happening, strategy shifts. Nobody's explaining the why or the how of this happening. And then when there is rapid strategy, they will now suddenly, leadership will suddenly wake up new tools. And this, I am guilty of this. I'm trying to moderate myself a bit better so that I can test in closed environments and test over periods. But we do this a lot. CRM processes change. Suddenly they say we're only focusing on stalled deals. That's all we're focusing on for the rest of the quarter. And it changes. And then there are lots of pivots in sales focus. First thing we say, we're selling to this market. We're selling to this particular region of the country. Next thing, we're shifting. And then we are changing geographies, mixed messagings about priority. First, we say we want to upsell to existing customers. Next thing, we want to cross-sell. Next thing, we're doing customer acquisition. Next thing, we're focusing on marketing qualified leads. When it's too rapid and the process changes are not rooted in something that really defines the company growth, it becomes a problem. Compensation, maybe salespeople used to be compensated on actual revenue. Now you're saying, no, you're going to be compensated on leads as well, or you're going to be compensated on payment milestones. And then it creates a very demotivating environment for your team. And this affects team morale. And we all know the high performance are the ones that leave first. The talent leaves first, and this is not good for the organization. There's lots of internal complaining. There's a lot of groups. People now start forming groups. Before you know it, you could create a political environment where people are coming and banding together because motivation is so low. There's a lot of burnout. There's a lot of apathy. In Nigeria, what we'll start saying, let me say it in a pure Nigerian accent. After all, it is not my father's company. That's when we start hearing all of that. People are not feeling like they can stretch. They're not feeling like there's any growth opportunities, right? So the question now is, as the pilot of the business, what are the 4 actions you can take in a turbulent time? And I'll be sharing some frameworks you can actually use as well when you're going through a difficult period. And the reason the frameworks are important is because as a leader, I have found that a lot of times people come and motivate you to be a better leader. People come and tell you what to do to be a better leader, but they don't actually give you something you can use from today to actually lead. Now, some of us are leading units, some of us are leading departments, whole companies, and some of us are leading people, and some of us are leading ourselves. These are actions and frameworks you can start using from day one, right? And the first thing is communicate honestly and often. This goes against our Nigerian culture. We feel that we should never communicate bad news. We know this, right? We don't communicate when things are not going well. We are waiting for things to get better to be able to talk about what's going on in the company. You need to share what you know and what you don't know about target shifts and strategy, and then hold regular check-ins if you can. Now, this is a great framework you can use that can help you when you're communicating. The first thing is to make sure you schedule consistent check-ins, whether it is every 2 weeks, whether it's every week. And even if there's no major update, you make sure you schedule it and you show up. Don't cancel it, right? And you're able to tell the team, if everybody knows revenues are declining at an alarming rate, don't wait until a time where revenues start picking up or we've lost a major distributor or reseller. In that regular check-in, make sure you're sharing. And then what you know, you share. And I know that as a leader, there's some things you cannot share, and it's fine. But if you approach this openly and honestly, you'll be able to know what you're able to tell the team that can help them feel less uncertain. Because if an engine goes off in a plane, a lot of times the pilots do not state that, unless there's a person in the plane that starts shouting, yeah, 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 a engine is burning. No. But what they'll tell you is what you need to do to be able to navigate. So offer what you know, and then provide context, explain the why. This is what we miss a lot. And I think this is a cultural thing, because I don't know how many of you go to doctors and the doctor gives you medication and you're asking the doctor, why are you giving me this medication? And I'll be like, are you saying that I don't know my job as a doctor? We do that a lot. But as leaders, you can't do that. You have to explain the why. The reason we are testing this product in this part of market is because we feel that this could potentially take some of the revenue losses we're seeing in another product. This SKU is important because of this. Try and provide context, and then encourage questions. And don't be defensive. As leaders, we should be able to understand how to explain, answer questions in a very transparent and open way. The second thing is stay steady and visible. Don't leave the cockpit and come in and be saying, yay, 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 oh my gosh, we lost 2 of our main distributors to competition. That's not what you do. You must be seen to be a leading force. And this is even for you that have one account or one major account you're holding. You have to be calm. When I started my sales career, one of the things my sales manager told me that I still do to today, he says, as a sales manager, leader, revenue manager, leader, that's if you're in marketing and everything, when you enter the office, you have to remove your heart, your liver, your lungs, your kidneys, and put it in a freezer. And you have to be calm in the face of the storm. So you have to be seen and heard as a leader. And this is a very nice framework. BEAR, be present. Make sure you're showing up. If it's a remote environment, which is not the case in most FMCG companies, make sure you are appearing, don't hide. Engage actively, make sure that you're with the calls you normally should be in meetings, still going and visit the top customers, and then appear informally too. So if there's a banter group, you have to also be active there, and then reassure through routine. Don't change the routine of the business, because that can make people kind of lose focus. The third action you can do is make decisive, informed decisions. And a good framework here is the DARE framework, data first. I would encourage us to look at something that Amazon does. It's called one-door or two-door decisions. Now, a one-door decision is a decision if you make that's irretrievable or irreversible, like changing the messaging of a product. If you're doing a very large campaign, that's a one-door decision. Try and get at least 90% of the data that will support the way you are going about this decision. If it's a two-door, it's reversible. For example, changing the color of a button or changing a particular color on the product label, right? You know that if it doesn't land, you can quickly change it back. That's a two-door. 60% of data can help you inform that. And then act with confidence, and then always own the results of the decision and respond, don't react. And then make sure that you evolve fast. So you're taking data from the decision that you've made. The last action is prioritizing well-being and morale. And Alex referred to this when he spoke about resilience. So when you're going through turbulent times, it drains the energy of your team, right? And a good framework here again is the CARE framework. So don't just check in, because it's very easy to be looking at just the data, the numbers, how are we progressing on this particular maybe reseller or region or revenue. You have to go beyond just the task to make sure you understand how people are feeling. Are they okay? Are you able to support them to unlock any issues they have? So don't just check in. Don't just check in. You also check on the person, and then you acknowledge the fact that we're going through turbulent times. Role model balance. Make sure you yourself are making sure you are able to continue working, because it's a high pressure, high effort in timing that we high effort period that we're going through to be able to survive turbulence, right, or difficult times. And then encourage support systems. So you prioritize making sure you balance the team. So in B4B partners, for example, we have something we call flexi days. So people are able to enjoy just a longer weekend. Either you take a Friday or a Monday off, because it is a high pressure, high work environment. So we make sure that people are able to sustain the work over the turbulent period. And the reason this is so important is it's good for somebody to be able to work 3 months during a tough period and is able to produce results, as opposed to working for only 4 weeks, breaking down and having to take a month off, because then it will impact the business. So yes, we're going through turbulent times, but we all have seen they will not last. And how you lead yourself, how you lead your teams is what shapes what follows the turbulent period. So some things you can get done in the next 30 days as we're going through this time in the market. The first thing is make sure you understand not only your team's priorities, but your priorities as well. What are you solving for? What are you trying to do? Are you trying to make sure that you keep growth, right? Or are you trying to say you're trying to make sure you don't lose revenue? Are you saying you're shooting for growth? Are you saying that there's an SKU you're going to take a bet on in the market? And then adjust your sales strategy based on this new reality that you've kind of defined. And then launch just one human first team ritual. It could be something as simple as anytime we cross a particular revenue, we all go out for lunch. It could be that you're going to be shouting out one person that's able to make sure we maintain this priority. And if you are leading yourself, it could be that for every Friday that I'm able to hit my target for the week, I am going to take out this amount of money and I'm going to treat myself and my family. So landing this, all this I've said, I know we're going to share the slides, all the frameworks, all the actions that I've shared, is that you need to understand that your team does not need a perfect leader, and you don't need to be a perfect leader. They need a present one. So some things to think about is communicate clearly and often. Don't run away, and don't lean into the culture of, if I don't talk about it, that means it's not happening. And when the results come, they will show for themselves, right? And stay present and stay calm. As a leader, leading yourself or leading a team, you should be able to manage your emotions quite effectively, and then make decisive moves. If a decision needs to be taken today, take it today. Understand what type of decision. Is it a decision that's irretrievable, or is it a decision that's reversible? Reversible decisions, you don't need all the data, 60% and you're fine. If it is a irretrievable decision, you may need to get to 90%. Get that data quickly, make the decision quickly, own the results, and then make sure you're using the results of the decision to make better decisions. And then care for your crew on the flight. Make sure that you are in the cockpit, but the people that are serving the rest of the crew are also taking, the rest of the passengers are being taken care of. They're able to work during this turbulent period for long periods. So I think I'm handing over back to you, Stacey, for Q&A.
Thank you so much, Napa. This has been extremely insightful. Thank you, really. So to recap some of the things Napa mentioned, 4 key actions we are living here today as leaders: communicating honestly with our team, clearly and often, us trying to be steady and visible. We should not disappear in the face of turbulence. Then being decisive, making informed decisions, and prioritizing the well-being of our teams. So Napa, a quick question for you. Aside all the things you've mentioned, what's one mistake you're seeing leaders more and more are making these days in managing their sales teams through turbulent times? One particular mistake that is very rampant that you're seeing, and how we can address it?
There are quite a number, but the one I feel that we need to do more of is using data to make decisions, data-driven decisions. We see a lot of sales leaders that come and say, we're increasing targets, or they say, I want you to do 30 calls a day. I think Precious mentioned this as well. Now, or people saying social media likes, because marketing is a key part of the revenue organization. But if we have data to show that the liked posts generate more leads that close, then the likes is not a problem. So we tend to not have reasons why we do or don't do things because it's not rooted in data. Okay, we would see that marketing has qualified leads. Maybe marketing does 100 leads a month, but out of the 100 leads, 0 close. But marketing feels that they have actually delivered on their task. But we need not just leads, we need qualified leads that actually close. So being able to have data throughout the revenue organization that drives decision making is something we need to normalize so that we stop almost like harassing revenue people for metrics that in the end don't really matter because they don't deliver the result of revenue.
Thank you so much, Napa. That was deep, Sha. Okay, I think I have one more question, but does anyone in the live audience want to ask any question for now? Because we are going into the fireside chat pretty soon. So if you have a question, this is a good place to ask it. Okay, I heard. Okay, Cherish.
Okay, Napa, great conversation. What's the smartest way to restructure a sales team for learner, more targeted growth? For a leaner, more targeted growth, what's the best way? What's the smartest way?
Thank you. Great question. Napa, did you get it?
Yeah, thanks, Cherish. I would start with two things that you should know as a sales leader first, and that is your customer journey, buying journey. How does your customer actually get to your product? And then the second thing is the sales process. So the customer journey and the sales process are very much aligned. However, the sales process is, for example, do you do a demo? Do you do a proposal? Do you do product samples before the customer buys? And then you look at where you can automate, right, if possible, and then where you have a chance to improve success in those two areas. So, for example, if we find that a lot of our customers come through resellers and distributors, and you have 5 partner sales managers managing those distributors and resellers, we're going to now see how do you manage the resellers and distributors? What are the areas in that management we can automate? And then how can we reduce the number? But again, we may find that we have proof of concepts. We have a lot of proof of concepts, and it takes us 3 days to be able to respond to all our proof of concepts. And our proof of concept demos, for example, for a tech company, we have 5 people, but they're overwhelmed. We can actually add more people there to have more proof of concept, because we have found when, we have more demos, because when we have demos, we have an 80% conversion. So it makes sense to add people there. So I know people have a tendency to always think of, let us have less salespeople, but that's not how I think about it. I think about looking at the customer buying journey, looking at the sales process, seeing where we can actually add automation so we don't need more people, but where we can add people where we see high conversion. So there is a bit of a science to it to make sure we're putting people where we can have the highest return on investment. And you can see the difference in thinking, because a lot of people just say, let us have more salespeople, but you're not even sure whether if you put them there, it will yield higher results. And then you just put people there, you start harassing the life out of them, and you're not actually having a good return on investment.
Okay. I hope that answers your question, Cherish. Chika is reiterating the fact that we need data-driven decision making. So Napa, we have 2 minutes before I bring up Chika for the fireside chat. And there's a question here around playbook, using a playbook. What's your playbook when your top performers start questioning if they should jump ship? I think that's relating to if they should move from a company that's no longer performing well to another. Yeah, so what's your thought on that?
I'm seeing a lot of laughter. Kunle and Chika. There is a way you treat top talent and top performers in an organization, right? Exactly. If you are truly a seasoned leader, you would have engaged very deeply with your top talent and your top performers, right? And top talent and top performance are not only motivated by money in terms of bonuses and compensation. They're motivated by how will I stretch, what values will I gain, what skills am I going to attract. So for top performance and top talent, you do need to have some sort of career conversation or career development plan ongoing with them. You will notice a top performer can stay at a job that's not paying as much because they feel that they are growing in that role. So a great leader always knows when somebody is about to leave. A great leader is always engaged in terms of performance with top talent. In fact, it's a concern to you if your leader is not talking to you about performance, because they probably are indicating a good leader. It's probably indicating that they feel that you are replaceable, right? It's actually not a good look. If your leader doesn't really engage you in terms of career and all of that, a great leader, because some people are not engaging because they don't know. And the last point I will say, and this is a bit controversial, if you're truly a great leader and you know that top talent does not have room to grow where you are leading, you will support them to transition to their next big opportunity. This is the truth. I've helped people that I have led practice and plan for their next interview. I've helped them make a good decision as to where to move next, because I have intimately been part of their career growth plan. So there was somebody that I worked with, and in the organization, they were offering him a role because he was a top performer and he got an external role. And I encouraged him to take the external role. I helped him with the interview process. I helped him with his resume. He's now leading teams in the Middle East and Africa. And he wouldn't have taken on that role because I knew that what we were offering him couldn't stretch him. So those are kind of the elements a great leader should have. Number one, being able to be actively developing top talent. Two, being able to understand whether you can, top talent is still able to grow in the role. Number three, if they're not able to grow in the role, being able to support them into their next move.
Napa, that's so brilliant. Thanks for that. I saw Aisha put up her hand. I don't know if that was an error, but she says, well said. Chika, are you ready for me to bring you up? Olukunle says some people just package a talent retainership program involving some benefits, promise of growth. Okay, that's a comment. All right. So now we'll be bringing up Napa, Alex, and Abiodun for a fireside chat. Chika is going to be moderating that session. If you have met Chika, you will know that he's a big man. Okay, so Chika is a business development and growth specialist with 15 plus years of experience leading market expansion and high impact partnerships across Nigeria. Currently, he's the head of partnerships and merchant acquiring at The Switch. He has held sales-related roles at Airtel, Philip Morris International, PZ, and Jumia, amongst other places he has worked at. So let me bring Chika up. Chika, are you ready? I can't hear you if you're speaking, though. Can anyone hear Chika?
His mic off spoiled.
See that? That was funny. Oh, he said my mic is stuck. Okay, maybe while Chika is trying to come up, we had about 4 or 5 questions that some people sent earlier. So maybe we just take that. And Chika, just let me know when you're back. Victor says, how do you aggressively address the production team when you are selling a high price specialty products like dried fruit snacks? I think this question was directed at Alex during Alex's session. So maybe I read the question again so that Alex can get it. So Victor says, how do you aggressively address the production team when you are selling a high price specialty product like dried fruits, snacks, and you keep encountering quality issues? Okay, Alex.
I think you have to make the production team understand, marketing first of all sets the standard for what the product is, because I think it's something I always tell, marketing owns the product, you own the formula, you do the rest. Marketing owns the forms. The rest of the functions actually run it on your behalf. So you should have the leadership to say, wait a minute, this is what the consumers are asking, and if it is not in line, this is as simple as that. Now, it is not to tell them, sometimes it's to go back, work with them. Because again, they may have certain constraints, and you can actually help them with the senior leadership to understand that this is the constraint that supply chain has. If we don't fix that constraint, then we will not be able to get problems. So a lot of marketing people sit in the head office, they don't even know their population. They don't even know the role of every item in their formulation and how it adds to either what is giving consumer value or cost. Because when supply chain decides we want to take to a cost saving, for example, they can take something out because it's cheaper to take this or let's substitute this. But that thing they are taking out, is it what is making the consumer like the product? So it's something as simple as, I can even use external packaging. You know, there are certain products where the margin is small, the external packaging is extra margin for the retailer. Now you take that, and the retailer doesn't have that extra margin, and you're surprised the product hasn't changed. But because the retailer is losing 20 naira or 50 naira per every carton that he has, he chooses to go with somebody else who is doing that. So you own the piece, you have to find out why, you have to sell the leadership why it is critical for that to happen. There should be no product change that should happen without it being endorsed on the entire package. That's what I think. I don't know if that answers that. I'll have something to what Alex said, and I think Alex is on that. Again, when you have a shared KPIs, oftentimes it puts people in a space of accountability. So, for instance, if you are able to, work with the leadership and then look with the child and the kind of KPI to say every return product has an effect on the bonuses or the performance index of the productions. Then people knows that okay, it's not just showing out. Anything that is a reject affects our own what we call rating. So when you have that joint thing, it helps you build a collaborative approach to how you deal with quality issue instead of somebody running. Because production teams are more geared towards the truth. So many are able to show up. Vis-a-vis, whatsoever the quality is. Yeah, quality is it, but I can tell you for sure that second that it is the efficiency of the line guys that becomes the priority on the others. But when you have a shared KPI that speaks to quality and rejects from the trade, then they take that very seriously.
Okay, thank you, Dr. Abiodun. Thank you, Alex, for your insight. Since Chika is back, Chika, I would be handing over to you. So I think we should start with the questions people have shared earlier so that everybody's question can be answered. And if we can do this in 30-45 minutes, that would be great as well. All righty, take on the stage.
Thank you, Stacey. Thank you so much for holding forth for me. Apologies for the break in the flow. All right, so leading on from where Stacey left off, one of the questions asked in the chat during the session from Felicia, she was talking about how small brands can balance short-term investment goals with long-term brand building and customer loyalty objectives in a challenging environment. Alex, do you want to take that?
Yes, I think the first thing is to have a very clear plan, because it doesn't matter how small plan. Start with the broad plan, thinking big, and then work outwards to say, okay, This is our aspiration. 5 years time to this size. What are the things that we need to do for us to get there? Then we walk backwards to say, okay, this is how we are going to execute product strategy to the areas we will cover in terms of trade, to your marketing, to your advertising. It is also important to understand your competitors. Again, now what we do is what I see most people, we know their names, we know this what they do. What is their reaction when people come into the space? Because, and where can they easily fight you, right? If you're a small player, it is easier for large companies to beat you at wholesale level. It's easier for them to beat you at the dealer level. It is difficult for them to close you out at the retail, right? Nobody can close anybody out. So it's important to understand. Why I say it's important to understand that is if you don't know this, there are certain companies that are very ruthless, right? They will plan a welcome party. I've been in a business where we had a anytime a new competitor is coming, we go in there, it's everything about them. And then we do everything to say, how are we going to make life easy for them? Why is it critical to do this? It helps you plan. Because if they go down, if you're competing with somebody who has a multiple, a wide portfolio, and you are only in one segment, and they have a place where I can take a hit, right? And I can therefore run your portfolio at a loss, particular category where you've been at a loss for 2 years. The question is, how are you going to survive in 2 years? Because all of these things have to be answered when you do your risk analysis. So like I said, once you understand that, then make your choices. We're going to go here, we're going to go here, we're going to go here. The instances where people have started from areas where these brands are not strong. So yes, there are lots of big brands, but if you go deep and check underneath, you find there are many places where they're not strong because they don't consider those places as important, right? So if you take a look at some of the beer brands, for example, right, in the past, people always say this particular region is value for money region, right? Because the biggest brands have value for money. So they don't take interest in them. But if you take a brand like Trophy, they started from where? Glacier, Ibadan, and now they're in all the top outlets competing head. They are all in all the top teams competing head to head. Anyway. So one approach could be to take certain areas where big players are not in there. As I said, if you get up to 5% share in a segment that is large or widespread, in a category that is well dispersed to be not an emerging category, you have enough critical mass to start. So focus approach, focus cities where you want. You can either come from small places in or from the large places in. Easier for you to be blocked at wholesale, not easy for you to be blocked at retail, because the retailer wants to give choice and wants to make money. Your margin is right and everything is right, and you start to sell. If consumers are picking it, they will start. If you're building distribution, make sure that when you build distribution, can you start to create off-take arrangement. So again, your marketing might need to be more targeted around the areas where you build distribution, because that's what creates retailer confidence. Understand that in every city or in every location, there's certain retail outlets that drive consumer behavior and even thoughts with other retailers. There are retailers who go to check other retail outlets to find out if they're stuck in this category, then it's moving. And that's how they form their own decision. So those are the places you must go and win in. And then you'll find out that if you get any of those outlets, 10, 20 other outlets are around the area, you go against it. And then there are some very small kamikaze tactics. Those days when we started, sometimes, yes, we've got to retail, you want wholesale to pick up. I will send them, they'll go to the market, go to different wholesalers and ask for this particular brand and ask for 5 other things they want to buy. When you say you don't have it, they will refuse to buy all the other ones. They will move elsewhere. So the person feels that if they are not buying this, then I will start to list. So by the time you do it a few times, okay, I'm losing sales of these other things because I don't have this. And then so there are different things you can do to make sure that
All right, thank you so much, Alex. As we were sharing, you're just taking me down memory lane, remembering how we were trying to bring in Philip Morris products back into the market back in 2017. And this is a segment where you cannot do adverts, you can't do promotions, you can't hire influencers, very dark market tobacco. And like you rightly said, the big outlets, so you go to the nightclubs, you go to the hotels, you go to the lounges, they're locked in contracts with the big player in the market. Either rent subsidies, ambience, branding, and all of that, and they cannot even list a pack of a product. So what did we do? Retail, where the consumers are coming one by one, picking one stick, picking two sticks, and yeah, it worked out. Thank you so much for that insight, Alex. Next question that we got from the chat. Cherish asks that how do you maintain brand consistency when you have reduced touch points because of the way the competitive space of FFG is kind of set up? How do you maintain brand consistency? Abiodun, do you want to take that question?
Yes. My question is just take clarity on that question. When you talk about consistency, what does that mean? Because that's a broad term. However, you said how do you maintain consistency across reduced touch points, particularly in the competitive space. So I'm trying to say, are you talking about sales? Are you talking about marketing? So the question doesn't quite leave it for me. But if I want to take it from those two perspectives, to say if you're speaking to marketing, then what you are indirectly saying is consistency is a function, is an internal thing. It's embedded in your strategy. And that has nothing to do with the space that you have. It just means that, this is how I choose to execute. And if this is how I choose to execute, regardless of the touch point that I have, I still maintain that execution framework. So, for instance, let's take that you are no more on keyboard and you want to operate off ATL and you want to get into PTS space. Consistency means that the messaging there is also something that you translate down into your posters, into your wobblers, into your whatsoever items, or whatsoever point of sales material that you want to deploy in that space. That's exactly what you do. If at what they call it, if at above the line and you're shifting based from BTL, and then you say, okay, this we want to actually modulate into the ATS space. The question again, like I said, consistency is about you as a brand. This is what you believe. These are your ethos, these are your DNA. These are your way you speak. This is what you represent. That doesn't change. It's like the mission of a brand and a vision of a brand. A vision of a brand can change depending on the scope and the exposure and the level in which the brand is beginning to do. For instance, I used to tell my students that when UPA first started, they said they want to be the #1 brand in Nigeria. Then, Elumelu's eyes opened wider and realized that I can do that in Africa. Now they're talking. So vision changes. But your mission as an entity doesn't change. And this is who you are, this is your DNA, this is your purpose of existence. And the same thing happens with this kind of context. As a brand, you don't change, your purpose doesn't change, your personality doesn't change, regardless of the touch point in which you're dealing with. That's how I would approach this answer, Chika.
All right, thank you very much, Abiodun. I want to come back to Alex for a bit. My question is trying to bring back one of the very, very key words that one of my role models used to say, Steve Jobs. He would say, connect the dot backwards to look forward. If you listen to a Stanford valedictory speech, you hear him say that over and over again. So looking back on your over 2 decades of experience in FMCG, what patterns or economic signals have you consistently observed that could use to predict major shifts in the industry? And these are things that sales managers today can pay attention to be able to be proactive in terms of building their strategies to win in the market.
I think for me, it's important to look at not just where we are, but other parts of the world, right? I always say there's nothing new under the sun. So whatever we're trying to do here is happening somewhere or has happened. Now, it is also important to understand the speed breakers. So I'll use a simple example. If we take retail, most parts of the world, especially in the developed world, right, retail is organized, right? You find more of a modern trade that's less of the neighborhood grocery outlet. And if you look at Eastern Europe, they were exactly like us, and then they moved to the same kind of setting where they're like more like Central or Western. Nigeria has happened in the past, even though today we see modern trade outlets coming in or growing. But I always tell people we've only gone back to where we were in 1990. Because in 1990, we had the Levante stores, we had the Kingsway stores, we had the Chelarams, we had the beauty stores, and we just gone back to that aspect. Now, what is critical for those things to happen is to understand what are the drivers of some of this change. So the first principle is that we will get there, but there are certain handbrakes that are holding us. One is cost of real estate, the cost of power, and the ease of transportation. Because when you put modern trade outlets, I said the closest to a Walmart in Nigeria is your local market. Because in Walmart, you can buy everything. To a car, to a gun, to whatever. In Nigeria, that's the local market. You can buy everything. The only difference, it is not owned by one person. Every store is owned by different. They have low cost to serve, but the infrastructure is crap. So not everybody goes there. But over time, the local market has been going down from where it was 80% more commodity volume to where it is now about 40%, depending on the category where you're going. So thing is, look at other places. There's nothing you're trying to do that has not been done before. Then ask yourself, why isn't it happening here? What are the speed breakers or what are the handbrakes stopping it? And watch out for those things. As they start to shift, you start to find out that those things will become things that will happen. If you take trends, so if you take small sizes, for example, so I remember more than 25, 30 years ago, we're looking at the market. People always give credit to Cowbell starting this. No, they didn't start it. It's the market women who started it. The market women were buying large sizes of milk, 1 liter sugar, and tying them down in small packs. What these guys really did was to automate it, right? And build scale out, right? So if we look inside, you will see, always ask, why is this happening and what is this telling us, right? And then start to think of, okay, can we automate this? Can we make it faster? Can we get scale out of it? But why I said this, nothing new under the sun. There's nothing new under the sun. So look outside, look at economies that are closer to us, economies that are at certain levels of GDP. So when we hit certain levels of GDP, there's a chart I had sometime in the past where you see certain industries start to think, because that's what starts to tell you that this will happen. But changes in retail, changes in use of digital, and then changes in the way the market is already doing things. It's now for us to adopt some of these things and then apply it.
All right. Thank you so much, Alex. As we were speaking there, talking about the market determining direction, we're looking at the example of Cowbell. Same thing applied in pure water. People felt that somebody just came and did pure water for the first time, but market women were fetching water and tying them in nylon. Then we used to call it ice water. And then eventually pure water was born. And from there, we got bottled water. But that was not the beginning of the market in Nigeria today. Piggybacking on that, trying to now look at the driving of trends from the consumer perspective. Dr. Abiodun, how do you feel the marketing leader looking at the emerging shifts in Nigerian consumer markets? Will FMCG brands be able to influence sales and plan their models over the next 12 months or 1 year, 1 to 2 years, as it were? So it's just simply saying consumer behavior. How can you look at it from now? Use that to proactively prepare or plan your strategy from now to the next 1 or 2 years from a marketing perspective.
Okay, so one thing is fundamental to consumer, because I know we say things, consumer is shifting, is drifting, like that, but the human truth of consumer never change. It's fundamental across. We love our egos are there. We love to be loved. We love to socialize, and all of those things are in place, and that is innate to human being. But technically, as an FMCG business, and not just an FMCG business, as a serious business, projecting into the future implies that you need to see what the trend looks like, and then have different scenario plans, different optional approach to how you deal with consumers from both commercial, not just sales, not just marketing, from both sales and marketing. As I sit here now, I begin to say, yeah, we talk about the relevance of open market, and it's going to remain open because it's going to remain relevant because our culture is so designed in which normally. Now I was telling someone lately that going to the market for some women is outing technically, and I'll tell you for sure. We have some with credence to my Igbo brothers. Igbo brothers really don't want their wife to do anything. Just sit at home, enjoy yourself, and let me go and make the money. But for the woman, if you are trying to force that woman to buy online, you're just depriving the woman the opportunity to go out. So for them, shopping is not about buying; it's about experiencing, another thing entirely. So that will remain because it's in our culture. However, if you see the trend from 2020, you've seen that significant acceptance of online, purchase has increased, and it's going to continue like that. So if any business is beginning to look at the next 2-3 years and you're not planning direct to consumer, you're not looking at different approach to your delivery, you're not looking at very, very, sectionalized approach to how you deal with consumer to feel order, then you will miss the mark in the next 3 years. That's the truth of the matter. And a lot of people are beginning to move away, finding a way to say, can I cut off distributors if it's possible to reduce my cost? Because distributors are easy, they help you to build scale, but see, when you begin to pay rebate, you understand that they are not cheap. They are actually very, very expensive when you look at it. So, but the question then becomes, how do you retain at least a sizable amount of it, but begin to look at how do I deal directly? And this has to happen very fast. Company has to be looking for how do I fulfill. Today, you don't have to have trucks. A lot of people do what we know what Amazon, what this guy they do. Their staff deliver. They deliver to people around their neighborhood. So you need to start looking at the possibility of finding people who are independent distributor in quotes to help you actually build order in that space. That's one area that I think sales need to be thinking. And then we begin to look at marketing. Marketing has gone beyond, the big billboard advertising, the big TV advertising. A lot of things are now compartmentalized on the board, and it will not change because the culture has come, and it will continue like that. And any business that is not looking at, how do I begin to integrate AI, integrate all of this technology into what I'm doing today in the next 2 years, will find it very difficult to be relevant. That's true. I'm an academician, and I have someone, one of the doctoral program, we did doctoral program together, and was talking about, still locked down in this space of, I want to go and collect data, I want to sit down and be analyzed. I said, see, you will die. A tool has come to help you, be more productive. Yeah, we were talking about ethical scholar in academics. Ethical academic doesn't mean that you cannot use a tool that helps you improve. For instance, AI will help you gather all the read 10, 20, 40 articles for you and summarize it for you. Why should I sit down with 75 pages? For what? In the era when I have a tool that can help me do that. The same thing goes with sales. So, for instance, we're talking about, and I love one company, and I mentioned that if there's any company who is very serious about digital integration into commercial spaces, Coca-Cola. Coca-Cola, at some point in time, you don't need to start chasing sales rep. Where are they? Where are they? It's not about business as a sales director. Just put tools together that will force people to be there. For instance, as a sales rep, you must visit an outlet, because the outlet that is routed for you in a day is geo-coded, that if you are not there, except your spirit is there. That is when, of course, because the outlet won't even open for you if you are not in that space. And then the cooler that you're supposed to go and scan, that you're going to go and merchandise, has a beacon, and that beacon only recognize your tablet when you reach the place. So there are a lot of system technology that will help you reduce unnecessary complexity in your life. So the more companies begin to accept and adopt and embrace these technologies, the more it will be easier for them in the next 2 or 3 years to come.
Yeah, thank you so much, Abiodun. As I given a particular example, it made me remember a time when I was doing retail sales distribution in Benin. I was on a beat with my own van. I was a PZ back then, and then there's a van ahead of me from Unilever, and we're up on the same route. We're going to the same outlets together. And then the guy came to my outlet and met me there. He didn't want to disturb me, so he went to the next outlet. He got there, and when he entered the outlet, his phone rang. Their software there, they go live from Egypt. They just called and say, hello, Dr. Abiodun, why did you skip the other outlet behind you? Please go back. He had to explain that he met the PZ rep there, and he asked me, so he cannot sell. He's waiting for the guy to finish. So that's why he tells him, come to the outlet in front, kindly open it for me to sell. So they opened it for him, he sold. And then when we left, he came back. And this was in 2015, 10 years ago.
Wow.
Yeah. Interesting times. All right, so thank you, Abiodun. I have a question in the chat box from Akinyemi. It says, how can I manage competition when competitors have several edges over me? We share the same routes, but then the person sells on credits, ridiculous prices, occasionally, regardless of selling at manufacturing selling price, fully mobilized sales agents. Wow, this is quite tough. Alex, do you want to take a shot at this?
Yeah, I think for me it's very simple. The competitor doesn't pay your salary, so the edge, I always tell people, everything else, the market supplies. So your van, Mitsubishi will sell to you, sell to your competitor. The people who build your factory or who build your equipment will sell to you, sell to your competitor. Right? The agencies who will help you develop your campaign will do for you for the competitor or whatever. So what's the only thing that is different is your people. They're the only things that are proprietary to you and your brand. So the focus for you is on your brand, and do you have the right proposition, and are you able to tell that proposition well in such a manner that is compelling? It doesn't matter whether the price is less. And then you've also got to be clear, what's the impact on you, right? And what are the tough choices you have to make? And then the focus, if your people are going to be the edge, then that's what the differentiator is going to be. I have seen the difference where the team can actually make a difference in the execution and the way they take it personally. In my early days in P&G, the people had a misconception that we were paid in Forex. That was why we were working so hard. I was a unit manager for the North, and we had just launched area. And every day, after my team had gone back to sell, I will take their daily call reports, and then I will form a route of about 10, 15 outlets that I will start from 6 p.m. going to where they haven't sold, try and sell myself, right? And the next day I will come back. Sometimes I'll come with them just to show them this is where you made a mistake. And in one of the outlets, I actually got a job offer because somebody saw, he didn't know I was the unit manager for the North. And he just said, you rep selling at 11 p.m. And the woman didn't want to buy because she did, I said everything, did everything, she didn't want to buy. And she simply said she had no money, right? So I said, okay, at the last resort, if you have no money, okay, fine. It's 11 p.m. I'm going home. What is it in the shop that I need that will be the equivalent of 2 streets or whatever? So I just asked her, give me one detergent, give me this, okay? Whatever products I think I use. The moment I was giving it, I said, Madam, now you have it. So here's the 2 strips for this particular list. All I wanted to do was to do the distribution. And the guy was standing, I think he was the regional manager for one of them, and he pulled me aside and he actually offered me a job. I didn't tell him I just said I was the rep for the company. So focus on your people, focus on making sure that your execution is fantastic. But do your plan, because we don't link sales with cash flow, with profitability, with how long, right? It will take for you to break into the market. Don't assume that the guy who is in the market is going to wait for you, right? Come in and settle at this. Some companies are okay, they don't bother. One of the companies I work for were very ruthless when it came to competition. We prepared a welcome party. That's, I don't know if that sounds like.
Yeah, it does. It does. Just to ragging on that, there was a question in the chat talking about promotions and all of that. What strategies do you use to drive promotions in a tough market without devaluing your brand? So it's kind of like balancing price and value. If you look at the economic landscape today, where we see that inflation is eating into the share of pocket of every consumer on a day-to-day basis. You mentioned power, you mentioned transport, while we're presenting as speed breakers that could slow down development as it were. Now, if you bring that back now as a sales leader, how can you be able to dynamically balance price while kind of like stabilize your price while you're still able to retain the value of the product and still be able to make sales at the right price to the consumers?
So I think the first thing is to understand what problem are you trying to solve. Sometimes pricing problems could be a problem of margin for the trader, for the kind of production to make sure that either the wholesaler, retailer gets extra margin. It's very clear. It's not a shift in the consumer price. It's a shift in the price they're buying, therefore they get the margin. You can give it through product offer, you can give it through an extra insert case or whatever, or something else, just to make sure that it is. If it's for the consumer, it's usually better to give it through additional. I think one of the mistakes I always see is that we think that if we go and do a buy 10 get 1 free, the consumer price will crash. So as it's a consumer that is feeling pinch, the wholesaler just pockets it, just makes extra money, and you find out that the promotion doesn't be helpful. So it's to be clear, which problem are you trying to solve? Is it a consumer problem? Then you have to give them, my preference would be give them more products at the same price. Therefore, they have an incentive to buy, because if you drop down the price, always more difficult for people to take it back up, or you say, okay, the perception of whatever has gone is. But if it's retail, they put an insight. You don't do buy 20, get 1 free, because the wholesaler will pocket it, right? And if it's wholesale, then I give the wholesale the market. So you've got to make your promotions in that respect.
Yeah, thank you so much, Alex. I wrote some notes down while you were talking. I remembered how we were managing the price of our cash cow back then, 2015, 2016 for Pera Kudio, when the carton price went from somewhere around 3.8 something to about 7.2. I know when I mentioned those prices now, some people in the room shouting, a whole carton of soap, 72 tablets for 7,200. Yeah, that was the story back then. But then, while we're doing that, we noticed something. We didn't get there very quickly. we had gotten to about 6.5, and then our recommended retail price had moved from, I think, 16 naira to about 18 naira. Now, it looked like it was very little, but it was a problem. The wholesalers were buying it, but retailers did not like it because it made them to start looking for change anytime they want to sell a tablet in the shop. You know, Nigerians have this thing about breaking money into pieces. They prefer rounded figure pricing. So I sell one tablet 100 naira, I walk away. So one tablet 100 naira, I walk away. Once that you need to bring out a 10 naira, 15 naira, slowing down that process. So at some point, that looked like the company adjusted price to 7.2 to meet that RRP of 100 naira to make the sales just keep going. And we stayed there for a long time and closed volumes. So I'm just adding this here just to also add to what Alex has said around value pricing and matching that with your own personal sales goals. I have one question for Napa now. I want to scatter the table a little bit. During the presentation and in the questions, somebody mentioned something around influencer marketing, like hiring brand influencers to push your products around selling, posting for likes, and how that translates to leads. So Napa, in your opinion, do you think that is something that can trigger you as a consumer to buy something? Does it work? Does it not work? What are your thoughts?
I think it really depends on the outputs. What I would advise for influencer marketing is to make sure the payment that you're giving to the influencer is tied to results that you can measure, and then to make sure your ideal customer profile is influenced by that person. Yes, there is a place for influencer marketing, but I've seen influencers that have 10 million followers and then they don't have a lot of engagement, and really when they post products, they're not accepted. So I know a bank that works with an influencer. Anytime they do a program, they get 3,000 new accounts. So of course that's value for money. But I don't know if you saw the question somebody asked around when you are launching a new product and you're not getting sales. I think it was Oyunwole. Did I get that name correct? Or did you note that question?
No, maybe that's when I dropped off and came back. My chat cleared up.
I see. So let me just take 1 minute because it's a big issue that people have. Like when you have a new product that you're going into market and you're seeing on the inconsistent, underwhelming sales, and you are relying on outbound outreach. This is what I noticed from the question. So I'll just give you 4 things to think about. Before you go and start doing more outbound outreach, I think you should spend a little time first to diagnose what the problem is. And there's some things you can think about here. You can think about whether there's a product market misalignment. Does the product actually have people that want to buy it? And as you're thinking about that, think about whether you're pitching to the right buyer, okay? And once you've thought around that in diagnosing what the problem is, within that diagnosing what the problem is, think again as well as, is there a messaging gap? I think Alex referred to this. The person that you want, that wants to buy your product, are you communicating the value of your product to that person? And are you using the correct channels to reach that person? Your distribution model becomes extremely important. Wherever that customer is, are you getting to the person, right? So after you've diagnosed why you are not selling, if you think through these 3 big points, you can now come to now building that outbound engine. And the basis of your outbound engine, the first thing is your ideal customer profile. I would recommend, since it's a new product, focus on one ideal customer profile, one person you're targeting, and do a persona for that person. What's the age? Where do they work? Where do they go? Very important, right? And in building your focused outbound engine, the second thing you need to do is to create a step cadence for that. Whether it's cold email, whether it's LinkedIn, whether it's WhatsApp, whether it's events, say that when I go for this physical event, because that's an outbound strategy, I am going to meet my ideal customer profile that looks like this, and I'm going to ask for a connection request, or I'm going to offer value. After the connection request, I'm going to have a demo. After the demo, I'm going to send a proposal, like have a sequence. And if you're doing outbound at scale, consider some sales intelligence tools, Apollo, Play, Instantly, Lucia, that can help you do that at scale, right? Once you have done that second part of you've built your outbound engine, the third thing you need to do is to create quick wins. Anybody that buys from you, do case studies. You can also do pilot programs, proof of concepts. You need to be able to do this. Also do early adopters. So say that if you are using my new product for the first time, I'm going to give you a price nobody else can beat. So as you're building the outbound engine, have something to offer as value as part of that engine. And then the fourth thing, I keep on saying data. Look at the data of the results of what you're doing. If you notice that email is producing more closed deals, you can deprioritize physical events. If you're seeing WhatsApp is producing more, put more investment in WhatsApp. Yeah. So just to make sure we understood that we answered that very important question, because people have a problem when you're launching a new product into market, especially outbound strategy, what to do.
All right. Thank you, Napa. And just to also add to the feedback you gave on the influencer bits and the right messaging, there's something that Alex shared when he was talking about some local retailers who are like local influencers that other retailers will go and visit to see what they are listing. To say, oh, if Napa is listing this particular brand, obviously that brand is moving, so let me go and list it too. So you as a salesperson, you should be able to identify those kind of influencer retailers in your own small spaces and get them to list your stock, even if it means giving out free stock or finding some way to get in there so that it can influence sales across your territory. So one last question for all the panelists before we close. I think we'll just start with Napa and then we'll go around Alex and Abiodun. What's one principle or leadership practice that has helped you steer your teams through on certain market cycle that you think is non-negotiable in today's markets? Napa, please.
Okay. I think for you as a leader, you need to understand your market extremely well so that you're able to share that with your team. I noticed that a lot of leaders lead by vibes. So they feel that leadership is harassing people, being able to drive performance by, constantly shouting at people. Very, very deep market understanding. Because if you understand the market, you will understand where your product fits in. And if you understand where your product fits in, you will understand the customers that will use that product. And if you understand your customers, then you understand what your team needs to be able to reach those customers. And if you understand your team, then you can motivate your team to actually overachieve and exceed on targets and results.
All right, thank you, Napa. Abiodun, please help us add to that. You're on mute.
Chika, I missed that question. Please, can you recap?
I was saying, if you look at today's market now as a leader, what principle leadership practice has helped you in the past to steer teams through on certain market cycles or seasons that you believe will be non-negotiable today?
I think that part of it, see, like I used to tell people, I said it's easier. I said the test of leadership is not when things are going right, because anybody can lead during that period when everything is on autopilot. You can just switch on. When you really hit the crossroad, that is when your leadership characteristic is well displayed. At this point, this is where to switch from being a manager into being a mentor, a coach, and a shared leader. This is where you need to be more vulnerable and drop your ego, and get into the real thing with your people. Because see, pressure are out there, and then if you now take on the ego and all you're doing is just slamming people with a lot of things, then you won't get multiple results. People will be frustrated, try to look for a way out of the pool. But at this point in time, this is where to let people understand that where you meet together, and this is where you need to start negotiate. Your negotiation skills to go at this point where you need to negotiate a lot of things with your key stakeholder, your fellow directors or your senior board of directors on behalf of your team, because a lot of things are going to change. Negotiating promotions, negotiating rebates, negotiating bonuses, negotiating all of these things. These are the things you have to motivate your team. And at this point in time, you need to bring out those skills to help you get your team to results. That's what I would say.
Yeah, thank you, Abiodun. Alex, please help us wrap up.
I think for me, it will always be about focus. What are the things to focus about so that it's very clear? It's very simple for the team. And communication, make sure that everybody understands what the focus is, what the priorities are. And then always check, look at the data. Why is this happening? Be able to answer that and then just push it. I think the last thing is that you can't be in the face of fear or panic or worry. So whatever worry about the results that you have, no matter how bad they are, you have to be in the face of what is possible. Optimism is a force multiplier. So if you're able to point at every point in time, yes, they're not the numbers, but you can show them what they're getting right, and then you start to move it. You can do this better, you can do this better. I think what they need is positive reinforcement and also positive confrontation when things are not going right. So it's not to break, it's not to put them under the bus, carry them.
Thank you so much. Thank you so much, Alex. Thank you, everyone, Abiodun and Napa, for that very, very interesting session, sharing a lot of insights over the last 30 minutes. Deeply appreciated. Over to you, Stacey. Thank you very much.
Thank you, Chika. Can you hear me? Because I think things are
Yeah,
freezing
sure.
on.
Sure.
Okay. Trying to continue. All right. So this has been a very, very engaging session. I've learned a lot. I've had fun along the way as well. I hope we all did too. Thank you, Alex. Thank you, Dr. Abiodun. Thank you, Napa. Thank you, Chika. And thanks to everyone, because it's not easy to take 3 hours out of a work day to be here with us to learn. So really grateful for the time. We have a couple of resources that we've put together that you can access at the end of this session. You get an email that contains a workbook that you can actually use to put together your sales strategy. We have resources on product launch that you can also access, as well as territory sales planning. So please look out for our email. So all these resources are going to be shared along with the slides, and later on we'll share the recording as well. Would also love to get your feedback on today's session. What did we do well? What could we improve for future sessions? Please share with us. And on that note, we've come to the end of today's session. If we did well, please, can we see emojis? It's pretty quiet in here. I think my whole system is freezing. I can't see anything on the screen, but I hope you can hear me.
Yes, we can. And we're
Okay.
cheering.
Oh, thank you.
Okay, so I think we are done. Stacy is having some issues, but I think it came at the right time because we are finished. Please, the feedback link will be shared. The resources will be shared. Oh, Stacy, are you back? Are you able to hear us? I was taking over from you for just a minute to close out. Are you back? And I see we can hear you now. Please go ahead. Close us out.
Okay, I had closed out and it just suddenly said my mic wasn't working. So, okay, I'm back. I was saying that we're going to be sharing resources on product launch, on territory sales planning. So you can use all those resources and your workbook to put together your strategy as we go through this turbulent time so that we can all win together. You would also be getting the slides and the recording for this session, but the recording will come in maybe later in the day or sometime tomorrow. And on that note, thank you everyone for spending time with us. Wishing us all the best of the day. Bye.
Bye,
Thank
everyone.
you. Bye.
Bye.